Welcome back to the European Market Open. A minute to go until the start of cash equities trading for this Wednesday morning. Here are your headlines. Treasuries trim their rally as Fed officials continue to downplay inflation concerns, but Richard Clarida joins the ranks hinting at future taper talk. EU leaders pledged to increase vaccine production as much of the world struggles with inoculation campaigns. The bloc's legal spat with AstraZeneca heads to court this morning. Plus, European governments grow more optimistic on a minimum global corporate tax deal. We get the view of the German finance minister, Olaf Scholz. Good morning, everybody. Just 15 seconds or so to go until the start of cash equities trading. Let's have a look at these futures then. And the London market looking to underperform a little. We do have London FTSE 100 futures fairly flat. Elsewhere, a little bit more upside, perhaps expected for European equities. The picture yesterday, we were fairly flat in the US. We were making some declines here in Europe, apart from Germany, where we saw some strength. But then Germany was playing catch up from its closure on Monday. So with that in mind, I was expecting to see that all of these markets might be a little more in step with each other here in Europe this morning. But certainly we are expecting that at least the futures picture suggested that the London market might be a little bit of a laggard. We see the FTSE 100 has opened and it is fairly flat this morning. We'll be looking to see what basic resources are doing, of course, with that in mind. Also, the banking sector very heavily weighted in London. So we'll see whether that is any kind of explainer for the divergence. Elsewhere, we've got the London market, as I say, open. The CAC 40 now open 0.2% to the upside. The Xetra DAX opening 0.3% to the upside. Energy stocks and bank stocks do seem to be a little bit weaker this morning, but European equity markets then opening tentatively higher. US futures and Asian stocks are up, with treasuries trimming a rally. That's after Federal Reserve officials once again reiterated that price pressures are temporary. But we then heard from the Fed Vice Chair Richard Clarida, who added that officials may be ready to begin talking about how to taper in upcoming meetings. Let's speak now to Eleanor Taylor-Jollidan, Union Bancaire Privée, co-head of Swiss and Global Equity. Eleanor, very good to speak to you this morning. Thanks for joining us. How do you interpret the latest Fed talk? Because a lot of it is from the same script, talking about inflation threats being temporary and transient. But then we have heard this growing number of central bankers talking about how there will be in the future possibly a need to talk about tapering, as if they're sort of floating a trial balloon to see how that goes. And it seems to have been going well, at least if you measure it on whether it's caused a taper tantrum. It hasn't. Yields at 1.57%. So how do you interpret this latest Fed commentary?
I think they're trying to speak to anybody and everybody at the same time. So as far as we're concerned, we do think we're probably at peak levels in terms of inflation currently. And it's hardly surprising. If we go back to this period last year, we were very much, or slightly, maybe say April last year, we were in the depths of lockdown for major economies. And it's as such, not surprisingly, that the emergence that we've had over the last few months has led to this higher level of inflation that we have at the moment. Then the question is that we struggle with, and that the Fed and central bankers all struggle with, is how long does this go on for? I would tend to be in the camp of the Fed, that this is likely actually to be momentary, that we probably will come to lower levels fairly rapidly, just because of the basic framework of the global economy that we have at the moment, of slowing demographics, of no major economy coming on stream, of certainly sustained demand as we emerge from the pandemic, but nothing really enormous beyond that which would push the situation. On the other hand, if things should get overheated, clearly the central bankers are wanting to prepare us, for any kind of measures they would need to take. Surprising the market is never a good idea, and we have seen central bankers in the past surprising either by tapering without forewarning or by activity that was unexpected by the market, and there does tend to be a more negative reaction to their actions.
And it's interesting, Eleanor, to think about some of the things that have been making the market nervous around inflation and whether we're done with those. So I was looking at commodities and also break-evens. And if inflation is going to be temporary, you wonder whether we finished seeing that spike up in commodities and whether break-evens have factored in future inflation expectations and now have some room to pull back. This chart we're showing on the screen shows spot commodity index, also the 10-year break-evens. Both of those just edging lower in the most recent sessions. And I wonder if we're turning a corner on that inflation story at all, I suppose in keeping with the Fed's way of viewing things.
It may be more than a curve than a corner, without wishing to be overly clever. I think we are seeing some commodity prices which had been perhaps a little bit stretched in the last few weeks as people were very optimistic about the opportunities coming out of the pandemic. We are coming out of the pandemic, but that doesn't mean the pandemic's going away. That doesn't mean that we're not going to continue to have some of the scars which the pandemic will have left behind it. And that does mean that some commodity prices might have been a little bit overstretched recently, and we are seeing those pulling back. Lumber, for one, is a price that has been coming to low levels again. We have also seen some agricultural commodities falling back a little bit. So I'm not overly surprised. As I say, I think we've really reached peak levels just recently, comparison year over year, which is fueling those prices, and it's normal that we should have a little bit of a pullback now.
Yeah, interesting. I'm just seeing headlines crossing the Bloomberg. Stocks Europe 600 rising 0.3%, set for a fresh record close. We'll see if that indeed comes to pass. And I'm looking at the sector breakdown this morning, Eleanor, and I see that only banks are in negative territory. I wonder if this has anything to do with thinking about lower, I'm looking at the yield on the US 10-year at 1.57% and wondering whether there's some thinking that maybe banks have got ahead of themselves, they've been pricing in a steeper yield curve, and if that isn't going to be forthcoming in the short term, maybe it's time to pull back on the banking sector in Europe. What are your thoughts on that?
I confess that banks are not one of my favorite sectors at the moment, certainly. They've had a fantastic first quarter this year in terms of activity. It helped certainly by the yield activity that we did see in February. And once again, as we turn, people wonder how sustainable that is. And the problem with a lot of banks is that if they haven't got a very well-balanced business model, there may be some areas of their business which are less sustainable. We've seen very low trading volumes just over the last month, for example, and that will have affected some players in that area. And then, indeed, we do need, as is perhaps suggested by the opening in Europe today, to have sustained economic activity, cyclical activity coming back, lots of economic activity, full stop, leading to greater demands for credit, etc. But we have to be sure that this actually happens, and I think that the verdict is somewhat out on that one at the moment. So I haven't been a huge buyer of banks into this year, and I continue to have a relatively modest positioning in that area.
Eleanor, thanks very much. Stay with us. Eleanor Taylor-Jolison, Union Bancaire Privé, co-head of Swiss and Global Equity Investments, and she stays with us on the program. Coming up, board games. Exxon faces a showdown with an activist investor seeking to overhaul the oil giant's board and make its climate goals more ambitious. That's coming up later, and we'll talk green investing next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 10 minutes into our European trading session, and European equity markets making some gains to the upside. And in fact, the London market and the others closing that gap pretty much. I mean, we see the FTSE 100 up by 0.2%, the DAX and the CAC up by a little bit more than that. We've had some M&A activity. Danny Berger was bringing us this a little bit earlier on. I see Vectura shares jumping 31%. You see that on your screen there. Carlyle to buy that business for 155 pence a share. Trading at more than that, though, now 160 pence per share. A little bit of M&A in the markets, and Danny is with us once again to talk us through some of the other stocks on the move this morning. Danny.
Yeah, I also mentioned this one earlier. That's Marks & Spencer's moving higher. In fact, it's the biggest gainer on the stock 600 so far this morning, moving up more than 5%. Reporting earnings, yes, they had a lower profit last year. Again, a big hit to things like clothing and home goods, but they're seeing things turn around. A bigger profit this year, so that has those shares moving higher. I also want to talk about some brokerage action. This morning we had the sell side, Berenberg specifically, out with a note about Danone, saying that it's not as cheap as it looks. Certainly not good news for investors who hold it, hoping that it wasn't too richly priced, specifically pointing out that a lot of their key divisions like infant formula, yogurt, water, that the outlook isn't so bright for those. Now, other analyst action we have this morning is surrounding UniCredit and specifically possible acquisition targets. This one comes from UBS, and they talk about Banco BPM being one of the strongest possible targets for UniCredit. It's not speculation, along with some reports that they're going to speed up the sale of some non-performing loans from Banco BPM is having their shares move higher. Finally, for that bigger macro picture, kind of a strange day because, you know, we're finally getting that talking about, or at least thinking about, talking about, whatever sort of derivative you want to put there about easing or rather tightening monetary policy, and that decision and that talk from New Zealand, more hawkish than we've heard from other central banks, sending the Kiwi higher. However, we're still looking at yields under 1.6%, and at the same time, a dollar that continues to hover around year-to-date lows, Anna.
Yeah, absolutely. The market's not joining the dots between the taper talk, the hawkish commentary from the New Zealand Central Bank and Treasuries and the dollar just yet. Those links not yet forged. 157 we trade on the US 10-year. Thanks very much to Danny Berger for that. Now, the oil giant Exxon faces a showdown at its annual meeting today as an activist investor says the company isn't moving fast enough on climate change. The boardroom battle comes during what our guest calls a defining year for climate action. UBP says it has seen increasing demand for sustainable investments. Eleanor Taylor-Jollidan, Union Bancaire Privée co-head of Swiss and Global Equity, is still with us. And Eleanor, I was really interested reading your notes and some of your thinking ahead of our conversation today on climate risks and the way that you've looked at them. You say that climate risks can significantly impact on a company's cash flow, and obviously that is why we've seen a big push to have further climate disclosure from businesses. How are you thinking about this sector at this point? I'm thinking here about oil majors because of the Exxon AGM. Do you exclude sectors, or do you buy into stocks and try and encourage management to change, as we're seeing from one activist investor with Exxon today?
So the short answer to that is both. There certainly are sectors that we do exclude. So first of all, ESG is not something which is new to the way that we invest on the Swiss and Global Equity team at UBP. We've been doing it since 2006, and it's incredibly encouraging to see how both our peers in the industry, how UBP itself also, and finally, and most importantly, how our customers have gradually become more and more interested in ESG. You know, about, 10 years ago, if we said that we had ESG within our investment process, our customers would look rather worried when we talked to them about that. Today, they are very keen for us to go into a little bit more detail. So indeed, UBP has an official exclusion list, and we obviously respect that on our investment team as well. And furthermore, there are some sectors which we have tended simply to avoid, again, because we found that the ESG risks to the cash flows of those industries or companies were too great for us to consider investing in those companies. And that's been in place since 2006. But certainly engagement is absolutely key in how we choose how to invest. And we have upwards of 400 company meetings a year where we are going to be discussing ESG and how that is going to impact the cash flows of those companies. And it is based on those discussions and how we engage with the companies between four walls, sometimes just, because we know the companies, have been talking to them for a number of years, we can keep the conversations quite casual. And if we find that the companies are not willing to respond to our suggestions, then we can be a little bit more organized in the way that we discuss with them how we would like them to integrate better ESG criteria. We don't claim to be an activist investor. What we care about is creating alpha for our customers. But if that involves us being more active with the companies in which we invest, we will do so. It has to be said, though, that the companies in which we invest are well known to us. We've chosen to invest in them because we think they have a good ESG track record. We are active investors. We have the opportunity, indeed, of choosing which companies we invest in, as opposed to a passive investor, which might need to be more active with the companies they are forced to hold because they are passive investors. That's one of the great advantages of being an active investor, indeed.
And I wonder, Eleanor, how far your ESG concerns go outside of the environmental concerns, which of course is part of that story, but not all of it. I'm thinking about this because we have a number of bank executives on Capitol Hill. We've already talked about the banking sector in Europe and how it's not one of your favourites at this point, and we can look at the low treasury yields and think about that. But from an ESG perspective, is there anything that steers you on that front when it comes to banks? I mean, these bank execs are going to be on Capitol Hill facing questions around diversity, facing questions around providing enough lending to parts of the economy that had previously not had enough lending. Is ESG in the banking sector something that's sort of rising up your agenda?
Well, ESG in general has been perhaps interpreted differently in different geographies globally, and we obviously are global investors as well as being Swiss investors. And I've actually been quite interested to see that the environmental concerns have perhaps been more to the forefront of corporates in Europe, whereas the social dimensions have been more to the forefront of US corporates. And I am delighted that, being a global investor, hopefully we can sort of make a link between those two arms and help companies to consider them all equally. Environmental concerns have been very much to the fore this year because of COP26, but that certainly, again, in the United States has perhaps been echoed by some of the tragedies that happened last year. Notably, we are, after all, one day beyond the anniversary, unfortunately, of George Floyd's death, and that may have focused the concerns of US companies more towards diversity. Anything that encourages companies to behave in a way which is respectful of all their stakeholders shareholders, I think feeds into a better performance and a more sustainable performance going forward, and I welcome it.
And it's interesting that you say that your customers are increasingly engaged in those conversations. Eleanor, how do you think about the changing tax environment that global businesses will face? I'm thinking about an agreement that we could see at the G7 around a minimum corporate tax rate, but I'm also thinking about a move to start taxing tech companies, at least in part, based on where they sell rather than where they've decided to put those profits in the past. How are you thinking about that? Because this could be something that looms large this summer as we see these G7 meetings.
And it is certainly going to affect some geographies, perhaps, to a greater extent than others, geographies which have traditionally made themselves attractive because of their low tax rate. It'll also affect some fiscal decisions at government levels as to whether they wish to make themselves attractive purely on a corporate tax rate. I would be more interested in a base for a company, so a decision by a government around tax, which didn't just look at having the race to the lowest tax rate, but actually considered how best to spend what they receive from corporates in tax in terms of better education, better research and development, more social cohesion, in order to ensure that you have a strong talent pool in order to further the improvements that companies can bring to a country. Certainly, we are a very global world today. Companies do work internationally, so to have a cohesive decision regarding tax makes a lot of sense, and I don't think anybody applauds an approach where people are looking to pay less tax and give less to the communities that are supporting them, both by their employees and their customers.
Eleanor, thanks very much for your time. Good to speak to you. Eleanor Taylor-Jollison. And Eleanor will be continuing her conversations with us on Bloomberg Radio. That's at 9 a.m. UK time. So in around 40 minutes' time, I look forward to catching up with Eleanor once again on Bloomberg Radio. Let's get a Bloomberg Business Flash. Some of the top corporate stories we're covering here this morning on Bloomberg. Here's Laura.
Thanks, Anna. There's yet another twist in UniCredit's debt saga. Some bondholders have received notice of a coupon payment even after the lender said it would skip it. Despite the notice, a spokesperson for UniCredit confirmed the bank's decision not to settle the coupon. If there has been an error and money has been transferred, it raises questions over whether investors will need to return the funds. Amazon has been sued by the Attorney General for Washington, D.C. for allegedly engaging in anti-competitive practices that raised prices for consumers. The antitrust lawsuit opens a new front in the campaign against major U.S. tech companies. It's the first such case filed in the U.S. against the e-commerce giant. Amazon hits back, saying Washington's Attorney General has it backwards. Vaccine maker AstraZeneca has sold $7 billion of bonds. That's even as it grapples with complaints over the supply of its coronavirus shots and issues of rare blood clots. The proceeds from the sale will go toward Astra's $39 billion acquisition of US biotech firm Alexion. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright in London. Coming up on the programme, back on track, the EU says half of adults will have received a first vaccine shot by the end of this week. We'll get the latest from Brussels. That's next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the Open. 24 minutes into our European session, modest gains for European equity markets. The FTSE 100 held back a little bit by its weighting towards the banking sector, which is sluggish today, elsewhere making some gains to the upside. Now, EU leaders have concluded a two-day summit. The bloc's leaders have pledged to give away at least 100 million vaccine doses to developing countries by the end of 2021. They also spoke of achieving herd immunity by the summer. Joining us with more details and a wrap of what we heard from this summit from Brussels is Maria Tadeo. Maria, good morning again. Can the EU then make good on some level of herd immunity by the summer? They've certainly sped up the pace of the vaccine rollout.
Yes, Anna, and they've done so very quickly over the past few weeks. And yesterday, the head of the Commission, Ursula von der Leyen, said our new goal is now to have enough doses to achieve herd immunity by the end of July. So they're moving forward their target by almost 2 months. The idea was initially that they would have to wait until September 21st. Now they believe vaccinations will speed up and the distribution will also pick up. And that's being reflected in numbers across the European Union. This week, the Commission expects almost 46% of European adults to have received at least one dose of the vaccine. When you look at a country like Germany, in Easter, they were on 12%. If you look at the numbers this week, they're now already on 40%. So you do see that big acceleration. Of course, this has big implications going forward. For Germany in particular, that is good news to some extent for the CDU. If they're able to say right before the election, we were able to handle the pandemic well. For the Commission too, they would argue if we do achieve herd immunity by July, it will validate our approach to do joint vaccination across the European Union. It would prove the Commission right to some extent.
Maria, thanks very much. Maria Tadeo joining us in Brussels. Just wanted to bring you some breaking news coming through in connection with the forced grounding of that Ryanair flight in Belarus. We're now hearing from the Belarusian president, Lukashenko, is saying that opponents are trying to suffocate Belarus. This perhaps in response to some of the EU measures that were announced, some of the sanctions measures that were announced. Also going on to say the Ryanair bomb threat email came from Switzerland. These are the words of the leader of Belarus this morning. Coming up on the program, we will talk about a big business in the US, big tech business in the US, Amazon facing its first antitrust case in the United States. Washington, D.C. has sued the tech giant for allegedly violating competition laws. Details next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open, half an hour into our European trading session for this Wednesday. And European equity markets making modest gains up 0.2%. US futures also point a little bit higher, maybe moderating gains slightly, up 0.2% on NASDAQ futures. Just want to bring you a red headline across the Bloomberg that says that AstraZeneca has started the sale of its first euro bonds since 2016. There's a lot going on at AstraZeneca at the moment, of course. They're tapping the US investment grade market for $7 billion to help fund an acquisition. So that is the backstory behind this particular bond sale. Let's get to the broader market action then. I went through the overall picture by geography, but let's have a look at things by sector. And in terms of the sector picture, we've got travel and leisure, the best performing sector this morning, up by 1.2%. It does seem to be more leisure than travel that is driving that. So some of the gaming companies doing well. To the downside, banks and basic resources are a little weaker. We had weaker iron ore prices, weaker steel prices overnight through the Asian session, and the banking sector perhaps reflecting on a US 10-year Treasury yield at 1.57. That is now the handle. It seems to be falling, this week. That certainly has been the trend of things. So we do see some continued demand for Treasuries despite those low yields. Let's get a Bloomberg First Word News update. Here's Laura.
Thanks, Anna. President Biden is being urged to reshape the leadership of the Federal Reserve, including dumping Vice Chair Randy Quarles. Senator Elizabeth Warren hit out at Quarles, criticizing his record on banking oversight. She said, "Our financial system will be safer when you are gone." His term as Vice Chair for Supervision ends in 5 months. The UK could block some listings on the London Stock Exchange if they pose a national security threat. Chancellor Rishi Sunak is set to launch a consultation on the plans in the coming months. It comes after concerns the current rules allowed Russian oligarch Oleg Deripaska to list his energy company back in 2017. He's the subject of sanctions in the US. Secretary of State Antony Blinken is reiterating the American alliance with Israel remains strong, but is also promising Palestinian leaders aid after years of the cold shoulder from the Trump administration. Bloomberg sources say the White House plans to nominate Thomas Needs to be the U.S. ambassador to Israel. He's vice chairman of Morgan Stanley and a former State Department official. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Let's turn to the green transition. Climate change concerns are top of the agenda for many investors, and energy giants are under increasing pressure to change. The Western world's largest oil producer, Exxon, faces a showdown at its annual meeting today. That's as an activist investor is seeking a board overhaul in an effort to shift the oil giant's strategy away from fossil fuels. Joining us now with more is Bloomberg energy and environment reporter Jess Shankelman. Jess, lovely to speak to you. So who is behind this activist campaign that we've seen so far against Exxon?
Well, Anna, it's a little activist hedge fund that was only founded in November last year called Engine Number One. They have 0.02% of Exxon's capital, but they've got a lot of weight behind them. They've been building up a bit of a campaign. Last night, Reuters reported that BlackRock will support this move. What Engine Number One want to do is put 4 of their nominated proposed directors onto the Exxon board. They are people with more of a experience in clean energy and in technology as well. I think what's interesting about this, a while back, what we see these kind of activist moves from environmental groups about trying to push companies to reduce their carbon emissions. This isn't so much about whether the world is moving to tackle climate change, but more about the fact that these companies, these investors are concerned that the world is very much moving in a direction of reducing carbon emissions. The IEA, the International Energy Agency, said last week that we're going to have to stop exploring for new oil and gas. Oil and gas is going to have to reduce by 75% by 2050, and Exxon just isn't moving in that direction. So what they see is a transition risk, and that Exxon might end up like a kind of Kodak that wasn't prepared for the arrival of digital cameras and smartphones.
Okay, and so with that as the backstory then, Jess, what should we expect from the meeting today?
So I think, while BlackRock may have said that they'll back it, we still need to see whether other major investors like Vanguard or State Street join together. Those three hold 21% of Exxon's capital. If they do, it's kind of looking like a referendum on CEO Darren Woods, whether his strategy, which is to say they can reduce emissions while still increasing oil and gas production, is valid. And if you look over in Europe at oil majors like BP and Shell, they're taking a very different approach. They're agreeing to net zero goals and saying they're going to reduce oil and gas production. So I think this could have reverberations if successful around all oil majors.
Yes, and something else that could reverberate around the sector, even if we've seen companies making those pledges around net zero, that's not enough for some, is it, Jess? Because here in Europe, a Dutch court, a verdict in a Dutch court is expected in a case that's been brought against Shell, and this will determine whether the oil giant has a legal responsibility around climate change. What do we watch for there?
Yes, I think the question here is, as you said, Shell has made moves to tackle climate change, set net zero goals, and its investment in renewable energy. But the key question here is Shell legally responsible? They argue not, because they didn't sign up to the Paris Agreement. It was 192 countries that signed up, and Shell may have adopted some of those stances, but legally they haven't. They're not kind of obliged to. So I think that will be very interesting. Again, it could set a precedent, because if the judge rules in favour of this environmental group, the Friends of the Earth group, then we could see similar cases happening, other oil majors being taken to court over similar questions. I think it would definitely be one to watch today.
Thanks very much, Jess. Good to speak to you. Jess Shankelman, Bloomberg's energy and environment reporter. Thanks for bringing us that story. Just back to what I was mentioning around AstraZeneca. I mentioned the dollar bond raising that AstraZeneca completed. In fact, that was yesterday. And the new information this morning is, so just a day after completing that blockbuster $7 billion bond issue, AstraZeneca is back raising more, this time in Europe. The vaccine producer is offering at least 500 million euros of 8-year notes. That is today. So coming back for more, the first time in Europe doing a euro bond sale since 2016. Still to come here on this program, Fed officials continue to downplay inflation concerns as Richard Clarida joins the ranks, hinting at taper talk. We'll be back to that conversation. We'll discuss the correlation between Treasury yields and price pressures with Bloomberg Market Live's Ven Ram, who's with us next. This is Bloomberg. Welcome back to European Market Open. 8:40 here in London, 40 minutes into our European session. Markets in Europe making modest gains this morning. Now, Amazon is facing new legal trouble. The e-commerce giant is being sued by the Attorney General for Washington, D.C. The suit accuses Amazon of engaging in anti-competitive practices that have raised prices for consumers. It's the first antitrust lawsuit to target Amazon in the United States. Danny Berger has been looking at the details here. And Danny, what is the case that the Attorney General has built then against Amazon?
And it's a pretty interesting one because not only does it join some of the other federal and state lawsuits against Google and Facebook, but kind of the approach the Attorney General is taking is one that's both novel and sort of old school in its approach. It is one that you maybe would expect in the 19th century to come about over a railroad baron, for example. So it's not just that they're stifling competition, it's that they're forcing prices higher for consumers. That's really the key here. So the allegation is that they'll charge a fee to a lot of their third-party merchants, causing the merchants to raise prices. However, Amazon will bury that merchant's results of their products if they list it for a lower price on a different platform. So there you have sort of the higher prices for the consumer and making it more difficult for other platforms like Walmart, for example, to compete against Amazon. Let me go ahead and read you, though, the response from Amazon. Amazon saying that the D.C. Attorney General has it exactly backwards. Sellers set their own prices for the products they offer in our store. Amazon takes pride in the fact that we offer low prices across the board selection. And like any store, we reserve the right not to highlight offers to customers that are not priced competitively. So that last part there is saying that, look, this is within our right and it's to help consumers.
Now, there wasn't much share price reaction to this through yesterday, though, Danny. Are investors not concerned about this particular line of attack?
Perhaps it's not necessarily less concern, but it's not a concern right now. I mean, investors know that these things do take a while to play out. For example, Google's trial from federal agencies isn't expected to start until 2023. So this will really take a while, and they are very difficult to prove just because of how antitrust law has been written and interpreted over the past few decades. And at the moment, this is just one attorney general from D.C., a pretty small market. But Anna, this could very well be seen as a test, as a sort of trial balloon that other attorneys general may join in later.
Okay, we'll keep that one under review then. Danny, thanks for bringing us the latest on that story. Let's get a Bloomberg Business Flash then here in London. Here's Laura Wright.
Thanks, Anna. Well, there's yet another twist in UniCredit's debt saga. Some bondholders have received notice of a coupon payment even after the lender said it would skip it. Despite the notice, a spokesperson for UniCredit confirmed the bank's decision not to settle the coupon. If there has been an error and money was transferred, it raises questions over whether investors will need to return the funds. Volkswagen says it's keeping Lamborghini despite reports of an offer of 7.5 billion euros for the brand. A spokesperson says there's been no change in the group's position. In November, VW started preparing the Lamborghini and Ducati brands for options such as a sale or IPO, but announced a month later it was keeping them both. One day after a blockbuster $7 billion bond sale in the US, vaccine maker AstraZeneca is heading back to the debt market for more. This time in its home region, it's offering at least 500 million euros of notes. It's first in Europe's common currency since 2016. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now let's get back to the market action. Ven Ram, Bloomberg Markets Live currency and rate strategist, joins us. Ven, very good to speak to you. And give me your thoughts on what's going on with treasuries right now. So for the first part of this year, we seem to be anticipating inflation. The market was nervous about that. And it seemed that there was this march higher in treasury yields for a time. That seems to have stalled. We've stalled around the 1.6 level or below 1.6 now. 1.57 is the handle on the US 10-year yield. What's happening here?
Morning, Anna. You're absolutely right. I mean, we were expecting Treasury yields to be a lot higher at the end of the first quarter, but that's not to be. What we have seen happen is that 10-year real rates have declined 25 basis points this quarter, and at the same time, inflation expectations, as measured by the five-year swaps, which every central bank looks at, haven't really gone anywhere. Those two factors kind of explain why Treasury rates have not been able to push higher. The bottom line, to me, is clear. If we are going to see Treasury rates climb back to the 2% handle, we need a lot of traction from higher inflation swaps and real rates. it feels like we need some outrageously high realized inflation prints to kindle the market's imagination again, Anna.
Yes, and the Fed said they wanted to see the actual data, not just the expectations of it, I suppose. So that would fit in with that. I mean, how much of this is tied to some of the Chinese commentary that we've seen? It seemed almost daily over recent sessions. We heard from Chinese authorities about how unhappy they were about higher commodity prices, and we do seem to have turned a bit of a corner on commodity prices at around the same time.
I think definitely that's a factor that's going to weigh on the Fed. Because we have seen Clarida kind of change his comments in the past 1 week, and the Chinese authorities are saying, look, I mean, we need a tighter regime, and they've engineered not only their comments on commodity prices, but if you look at their CNY fixing, that's a lot higher as well, and therefore it's clear that we are in a tighter environment for rates, and we saw that overnight with the RBNZ as well. I mean, they were thought to be one of the more dovish central banks in this regime, but not to be. Now they're saying that, look, rates may need to go shift higher as early as next year. So definitely, I think it's all feeding through, and the Fed is getting the message that sooner rather than later, they need to begin that taper talk.
Yes, and we've had a few warnings about that taper talk, and it hasn't seemed to cause a tantrum, not just yet, Ven, although, of course, we keep watching. You mentioned the Chinese currency, the yuan, and we were talking yesterday with our colleague Mark Cudmore a lot about this, about the Chinese offshore spot. That dropped below 640, so we saw some strengthening of the Chinese currency in yesterday's session, and then with the CNY dropping below 640 in today's session. What are the broader clues that you're taking away from what's happening with the Chinese currency at the moment?
I think that that's going to be a lot more supportive of emerging market currencies, and I think that a part of it, to be sure, is a reflection of the dollar's weakness that we have seen, and that's. But the significant fact to me is that the CBOC is willing to tolerate tighter rates, and if only to curb commodity prices and keep the market's exuberance in other sectors under check.
What do you make of the, you referenced also the commentary from the RBNZ, the central bank over in New Zealand, and that lifted the Kiwi up by more than 1% on the New Zealand currency, the Australian dollar up by 0.4%. Do you think what happens in that part of the world stays in that part of the world in central banking terms? I mean, these economies, of course, have not been hit at all to the same extent as many other developed markets over the recent months by coronavirus because of the very effective border controls in place. So it could be seen as a very different story, a very specific, idiosyncratic story. But there have been episodes in the past where things that the New Zealanders have been doing have had global resonance later on when it comes to central banking. So what's your sort of takeaway from that story?
Definitely, I think what the RBNZ has said overnight is going to kind of embolden other central banks to walk down the path of a tighter regime, particularly in the case of the RBA, which has been extremely dovish this year and extremely dovish in the past several months. And I think that their next meeting is going to be pretty key. The RBA has said repeatedly, look, we want to see higher actual inflation prints, much like the Fed. And I think that, if you look at the G7 space, so many of the central banks have gone from being radically dovish a few months ago to being pretty hawkish now. We've got the Norges Bank, we've got the Canadian Central Bank, now we've got the New Zealand Central Bank, and probably the RBA, and we've got the Fed Clarida saying that, look, we need to begin taper talks again. So I think it's all pointing to higher rates, and I think definitely central banks like to act as a group because they don't want to be seen as, lemmings, as Warren Buffett says, lemmings feel strong when they act as a group, not as one. You never get the blame for a single lemming.
Okay, Ben, thanks very much. Wise words, I'm sure. Ben Rahm, Bloomberg's MLive Markets Live currency and rates strategist. Coming up, it's showtime. Ex-Boris Johnson aide Dominic Cummings is set to reveal what he knows about the government's missteps during the pandemic. He testifies in Parliament shortly. We'll get the details next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open, 53 minutes into our European trading session. Modest gains for European equity markets, in fact, increasingly modest. And as we watch Europe just move away from earlier gains, US equity market futures suggest up around 0.2% on most of the major markets in terms of those futures right now. Now, let's step away from the markets for a moment and think about where we head on UK politics, because this is looming for you in the next hour of programming. Dominic Cummings says he plans to reveal what he knows about the UK government's missteps during the pandemic. Prime Minister Boris Johnson is braced for an onslaught of potentially explosive criticism from his former top advisor, who will give evidence to MPs this morning. It's coming up in the next hour. The question is whether Cummings has enough insider information to seriously wound the Prime Minister, who has come through recent controversies unscathed, in particular with the success of the vaccine rollout. Let's speak now to Rosalind Matheson, our executive editor for international government. Ros, good morning. So what could Cummings really say today that would be shocking and also new, because he took to Twitter over the weekend, giving us quite a few headlines already?
Well, that is the big question, because as you know, he's been making attacks on his former boss for some time now, not just about the pandemic, but really cataloguing a litany of alleged failings, very long essays on his blog, for example. And he is limited by government confidentiality legally in terms of what he can reveal. At least we can expect him, though, to make a lot of noise, because it's clear he's very angry at Boris Johnson and ready for a fight. In terms of what he might say that's new and very shocking, well, that is the question. Does he have fresh inside information on the decision-making around the early days of the pandemic, for example? Because we already know that there was this initial focus on the idea of herd immunity, which went pretty wrong pretty quickly. And of course, the reports that the Prime Minister more recently has said he'd rather see bodies pile high in their thousands than order a third pandemic lockdown. So the question is there anything beyond that, particularly around the early days of the pandemic, that Dominic Cummings can say that would really hurt the government? And that's in question.
Yeah. Yeah, and of course, I mean, the Prime Minister has denied making those comments, but still many sources telling many news outlets about them. No doubt we'll get into a conversation in Westminster around the semantics of defining herd immunity and whether there was or was not that policy. How much damage then can this whole day do to Boris Johnson, to the Prime Minister, sort of away from the Westminster bubble? Ros, is this going to be something that sticks?
Well, that's right, because Dominic Cummings himself was a key decision maker during some of these times and was quite controversial. Of course, he himself broke lockdown rules that he helped set. And we haven't seen a discernible impact on Johnson and his party in the recent local elections from the claims that have been made. If anything, we saw the Tories strengthen their hold on various parts of England at least, and voters seem more focused on recent events like the successful vaccination campaign and efforts to reopen the economy and looking forward and so on. So the question is really, do they see what he says now as really being in the past? Does it dredge up painful memories of that early part of the pandemic, or do they feel it's a closed book, really, and people are moving on and looking ahead?
Yeah, absolutely. There is going to be an investigation, but yeah, we'll see whether we get any light being shed by Dominic Cummings into this today. Rosalind, thank you very much. Rosalind Matheson from our government team, thanks very much for bringing us that early heads up on what to expect in the next hour. Back to the markets, European equity markets then making those modest gains. The Surveillance Early Edition team is up next. They'll take you through all the market action and the politics as well. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
We are on track to vaccinate 70% of the adult population in the European Union by the end of July.
This could be a very good summer for the world, where the way of a tax race to the bottom is stopped.
If we're wrong, of course we could be wrong, I think we have the tools to address inflation.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, May 26th. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Talking about tapering, Richard Clarida adds his voice to the ranks of Fed officials, saying that a discussion around reducing support may actually come soon. The EU is set to donate 100 million doses of COVID-19 vaccines as it approaches the 50% mark for adults in the bloc who have received at least one shot. And Dominic Cummings is set to speak to lawmakers this hour, with Boris Johnson bracing for explosive criticism from his former advisor. So we have a lot going on. I can't believe it's only Wednesday. Sometimes feels like Thursday or a Friday at least. Now, central bankers are edging closer to starting the conversation around tapering. Last night, the Federal Reserve Vice Chair, Richard Clarida, added his voice to the chorus, calling inflation largely transitory. Now, he also said that the Fed may begin to discuss tapering asset purchases in upcoming meetings, echoing the minutes of last month's meeting. Now, at the same time, we also heard from the Reserve Bank of New Zealand, offering markets a hawkish surprise, saying that its cash rate may rise next year. Let's get more on the story with our Danny Berger. Hi, Danny. So if you look at the markets, it's again inflation back at the forefront, and actually with Fed officials talking.
Yeah, and look, you'd think that finally, okay, maybe not finally we're talking about inflation, but talking about tapering finally, that you would get a big reaction from markets. Well, look, you certainly saw it in New Zealand with the Kiwi dollar jumping more than 1%, but when it comes to U.S. assets, I mean, it was kind of just a market shrug, Francine. You still have U.S. 10-year yields below 1.57%. You have the U.S. dollar around its lowest basically this year, and you have some gains from U.S. futures as well. So, you know, it wasn't a big reaction, so you could say, okay, maybe it's all about timing. Maybe we're just saying, okay, they're talking about it, but that means the actual action won't happen until later, and who knows what form that action will actually take. But I would also remind everyone that the 31st, the last day of this month, is a Monday. It's a bank holiday here in the UK. It's a holiday in the US. So some people also might be bringing forward some of their month-end rebalancing. You also have Treasury auction, so that might kind of confuse the message and might be why we're not getting a very strong reaction to possible hints of talking about tapering.
Yeah, and Danny, actually, at the bank holiday weekend, apparently we will not have rain, which will surprise everyone.
Finally.
Because we're just not used to it. Danny, elsewhere in the markets, our two favorite topics, intersecting. So it looks like GameStop, you have to run me through this, is quietly getting into NFTs.
Yeah, I mean, like if you could think of sort of an inception of market memes, this is it. You have GameStop, the stock market meme, making a market meme of NFTs. So essentially, if you can wrap your head around that, Francine. So they had on their website, they have a new domain name. If you're hoping to register, nft.gamestop.com. Sorry, it is already taken by GameStop. And basically, it's a really short website and is calling for developers and other people in the NFT community to join this new platform they're going to make to develop NFTs. And I kind of feel like this is a really smart move from GameStop because they know their audience. GameStop has become, you know, the stock everybody talks about on Reddit is really part of that community. So why not dive into NFTs? And the message they have on their website is power to the players, power to the creator, power to the collectors. I mean, that feels like a real power to the people message because, again, it seems like they know their audience here.
Yeah, it does. So Dan, basically this is in a lot of video games, you kind of buy, it's not really an avatar, but you can buy points to change yourself, right? So it'd be NFTs linked to that, or could it be NFTs in everything in that game?
It does seem like it's kind of very broad at this moment. Again, GameStop isn't giving a lot of details. I mean, it's just a platform that so far as we can tell is going to be run on Ethereum. So maybe this is also good news for Ether. So it could kind of be like, you know, the NBA Top Shop kind of game where you go in, you can buy different NFTs. Maybe it is NFTs within games. Again, they're being kind of quiet about this and not giving a lot of details. They did have a job posting, but perhaps it's also just about this digital transformation that GameStop is trying to do. And if you're going digital, why not go all in with NFTs?
Yeah, Danny, thanks so much. I know we'll talk about the story a lot more. Our Danny Berger there with all the latest on the markets and, of course, all the latest on these cool topics that we're watching as well. Now, the EU has committed to donating at least 100 million COVID vaccine doses to developing countries by the end of the year. Meanwhile, France is expecting to decide later today whether additional restrictions are needed at the UK border as concerns grow over a variant first identified in India. Well, joining us with the very latest on this from Brussels is our Maria Tadeo. So, Maria, first of all, what is summer going to look like across the EU 27 and the UK?
Well, look, Francine, the idea here is that today the French could announce more restrictions. They worry about the mutations, and this is something that overall European countries do worry a lot about going into the summer because they know this year they have to be able to open up, they have to be able to save the summer season, and they can't have a repeat of last year, which was a complete disaster. The problem here is that we are seeing a lot of divergence between different countries. So as I said, the French could put into place more measures from people coming from the United Kingdom. But if you look at a country like Spain, if you're traveling from the UK, you don't even need a PCR test to enter the country and take a holiday there. So that unity across the measures does seem to some extent to not be working.
Maria, the EU is also getting more confident about a global corporate tax. So is progress actually being made on the more contentious parts?
Yes, and look, Francine, this is all around that 15% minimum corporate tax that was announced by Biden last week. We know the Europeans and all the big economies in the euro area welcomed the move, and they now believe that this time there could be a real consensus for there to be a breakthrough. Now, the timing in the next few weeks is that, you know, the G7 is meeting in the UK. They could put something to paper, something more concrete that then the G20 could ultimately discuss and sign off in July. You know, the timing is still a lot to be seen, but what is key is the intention and the hope from the Europeans who now say this is probably the best chance that we've ever had for meaningful tax reform, in particular when you look at digital companies.
Maria, thanks so much. Maria Tadeo there in Brussels with all the very latest coming from there. Now, stay tuned for Bloomberg Surveillance Early Edition because Boris Johnson is also braced for lambasting from the man who was his most senior advisor. He's also always pretty colorful. Dominic Cummings is expected to give evidence before Parliament as part of an ongoing inquiry into the lessons learned about the government's pandemic handling. Cummings, who has become increasingly critical of the Prime Minister since his dismissal in November, is expected to get questions on decision-making in the early months, the timings of lockdown, and PPE procurement. More on that later on in the program. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
My view and the general Fed view that these pressures are most likely to be transitory. If we're wrong, and of course we could be wrong, I think we have the tools to address inflation.
The Fed Vice Chair, Randall Quarles, there speaking to the Senate Banking Committee. At the same time, his colleague Richard Clarida insisted that price pressures will be transitory. Now, he also doubled down on tapering comments, saying that the central bank may be able to start discussing measures at upcoming meetings. Well, joining us now to talk about all of this is Kit Jukes, Societe Generale Chief FX Strategist. Kit, I want to talk to you about crypto and everything in between, but let's start with inflation. They're thinking about talking about tapering. I mean, in terms of timeline, where does that bring us?
I guess that means that probably actually the back end of the summer that they'll start talking more seriously, and then they can taper. I mean, so I think in fact it means that we can almost stop thinking about this. They will taper sometime late this year, I guess, and then we'll move onwards from there next year, and that kind of moves past. The question then is, does tapering matter when you've told everybody so much about it? You know, the Treasury market's moved about as much since the low in yields as it did after the taper tantrum started in the US back in 2013. And then eventually the peak in rates actually peak in yields wasn't much higher than that initial spike in, you know, at the beginning of the taper tantrum all the way back in May 2013. So there's part of me that thinks, you know what, we must have done a good job of pricing in the bulk of the yield move from tapering when it happens. Now, the detail of what it does exactly to the curve and what it does to rate expectations and what it does to mortgage-backed securities and so on, I think that's where there's more uncertainty. But you know, most of the move in bond yields is done.
Yeah. Kate, I have to say, first of all, also congratulations on your morning notes, because they're one of the first things I read, and I always enjoy them. They're kind of like funny, but also insightful at the same time. And you wrote something, you know, saying like the Fed doves and global recovery is keeping the dollar on its heels. Do you change actually your, you know, where you see dollar by year end?
No, so I could be forced to at some point, but for now, I think that as long as the Fed's keeping rates anchored and the global economy is healing, I should have a softer dollar. So for the last, I don't know how long, for 9 months, we've put a peak in for euro dollar somewhere between 125 and 130, somewhere at the back end of this year. That changes when the market starts to seriously price in, you know, more rate hikes in 2022. And I think that, in my mind, that happens around the turn of the year. But if you moved that and you said, you know, they're going to be talking aggressively about where Fed funds are going to be in 2022 at Jackson Hole, then I would go off into a bit of a funk. But unless they do that, I don't. I think we're still on track for that, and I hope we are, because the more I get a weaker dollar based on global economic recovery, the happier I am.
Yeah, I mean, a lot of people will be happy with that. What kind of recovery are we actually going to see? There seems to be an assumption that, you know, even if inflation is transitory, the recovery is firm. What if we have variance? How, I mean, do you have a kind of best case and worst case scenario, or do you at some point just kind of stay in the middle?
I try to stay in the middle at the moment because you know, what do I know about variance and the medical side of it, and we're all stabbing in the dark in that sense because we genuinely don't know. I certainly feel from where we are now, you know, sitting in the UK with an Indian variant, which seems not, even in the bits of the country where it's most severe, not to be affecting hospitalization rates too much. I kind of cross my fingers and say, I hope that this means that the vaccination program, which is accelerating globally, and that's a great thing, is going to, even if it doesn't prevent people catching this disease, it's going to avoid people being too sick going forward. So, but you know, I read as much about it as everyone else, but I don't, you know, putting positive and negative cases for growth on it. We just don't know enough about this to do that.
Kit, what's your take on New Zealand today? What we heard from, you know, the central bank, and does it change your view on the currency?
So initially I thought the currency had overreacted, then I wondered whether it had underreacted, and then I decided that it was too early and I needed coffee. You know, I mean, we know that you know, New Zealand was less affected than most by the pandemic. We know that their housing market is on fire and that their current level of interest rates is too low. So confirmation that we're going to get rate hikes next year takes the currency up 1%. I think it's going to do okay. I think the currency's got further to rise. But what I think it does is it moves the focus and keeps the focus on all the other countries that are going to raise rates in the dollar zone before the Fed, and in Europe before the ECB, and there's plenty of them. So euro-dollar, you know, remains relatively dull, but I think this might help the Canadian dollar. They'll hike before the Fed. It'll help the Australian dollar. They'll hike before the Fed. And it'll probably help all the Central Eastern European currencies and the Norwegian kroner in Europe, where rates are going to hike before the ECB, because this is what the focus is on, is who is going to actually move on rates in what order is probably the next focus.
Kit, thanks so much. Kit Jugster, Societe Generale, stays with us. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU has moved to impose further sanctions on Belarus over the forced landing of a Ryanair flight and the arrest of a journalist on board. EU leaders are planning tougher measures, adding to an existing list of sanctions. It could be a month or more before the European measures do take effect.
This was an act of piracy we cannot accept in Europe, so it is absolutely clear that there must be reactions, and I'm very happy that the EU decided that fast about the necessary steps.
And Russian President Vladimir Putin is set to meet his U.S. counterpart, President Biden, in Geneva next month. The June the 16th summit will be their first in-person session since Biden did take office. It comes amid deep tensions between the two nations over cyber attacks and military aggression and human rights. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, stay tuned to Bloomberg Surveillance Early Edition. Boris Johnson braced for a lambasting from the man who was his most senior advisor. Dominic Cummings is expected to give evidence before Parliament as part of an ongoing inquiry into the lessons learned about the government's pandemic handling. Well, Cummings, who has become increasingly critical of the Prime Minister since his dismissal in November, is expected to get questions on decision-making in the early months, the timings of lockdown, and of course, PPE. More on that later on in the program. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, Boris Johnson is braced for a lambasting from the man who was his most senior advisor. Dominic Cummings is expected to give evidence before Parliament as part of an ongoing inquiry into the lessons learned about the government's pandemic handling. That led to the highest death toll in Europe. Now, Cummings, who has become increasingly critical of the Prime Minister since his dismissal in November, is expected to get questions on decision-making in the early months, the timings of lockdowns, and PPE procurement. Well, Kit Jukes of Societe Generale is still with us. Kit, does it move sterling at all? Does it actually have an impact, I guess, on how, public perception of the Prime Minister will be? And so does that move economics? Or, given we're in a vaccination, is that separate to everything else we're seeing?
I think it has minimal impact, but unless it really has some bombshells in it that we can't predict that are so big. But I thought that after the Conservative Party did well in the local elections only a few weeks ago, that I thought that kind of set the scene. Really, we've got a long time till the next general election. We've had all the issues about the mishandling of the crisis and some negative press around that. And the Conservatives came out fine. There's not much that's going to shake up the political establishment, really. So it makes a lot of headlines on the front pages of newspapers, but I don't think it has an impact as far as sterling's concerned. If it did, I'd probably go the other way against it. But I don't think. Sterling is remarkably stable at the moment. I don't think this is going to push it far.
So what does move, actually, sterling? If you look at some of the Brexit things and equivalents, is there anything on the horizon that you think could move it, or is it a pretty range-bound?
Yeah, I think it's more range-bound now. We've had the rally on the back of the faster vaccination rate in the UK on the strength of the data. We'll go on getting stronger data. You could get a little bit more help from sterling if the MPC is hawkish enough to make it clear they'll be hiking rates before the ECB. But I get asked, every 2 or 3 days, someone wants a view on the balance of payments, which is pretty negative. And history says, after the 76 low, the 92 low, the 2008 low, and the 2016 low, something good comes to make sterling rally after each of those. And so I kind of think the next 5-10% moves probably a stronger currency, but it's certainly not soon because there is nothing that good on the horizon. So I fear it's becoming a less exciting currency for a bit, but something may come along.
Well, yeah, something that's exciting, and definitely tweets that come along all the time, is crypto. How much time do you spend thinking about crypto, Bitcoin?
It sort of goes in waves. I spent some time with people asking me a lot of questions about it, which, as much as anything else, made me aware of how little knowledge there is around generally about it. And I think there's a lot of people have learned a lot more since. And now I think, I still think about trying to work out how central banks react to the sort of the broadening of the crypto world, and how much they'll just let it be. Because the biggest threat to crypto is that central banks don't want to give any ground to anything that isn't central bank controlled currencies. So I think we have to watch their reaction more than anything else.
Kit, what's most exciting in the market right now? We talk about crypto, we talk about some of the currencies. I don't know whether it's, a black swan event that you're thinking about, although if it's black swan, very few people see it, or whether it's, geopolitics that could impact to the downside by surprise some of the effects that you're watching.
Look, I think geopolitics moves markets more than monetary policy at the moment, just because, we're pretty set fair. If you think we didn't really shake things up with an astonishing inflation number out of the States or an astonishing payroll number, we've got economic data that's really all over the place, to be honest. But by contrast, this week's weakest currency by a significant margin is the Chilean peso because of politics in Chile. And And I think we have pockets of that around the world. I think that's where we get the next big move. I'll come back to my sort of first point. What I hope for is that the politics is quiet, vaccination spreads, and the global economy heals, and that'll be a better place for all of us. But it's the politics that can blow that up, I think, in lots of places. That is, it does have a tendency to be a bit random, but I think that's where it'll come from.
Okay, thanks so much. Kit Jukes there, Societe Generale Chief FX Strategist. Now, of course, we'll continue to cover Dominic Cummings' 4-hour testimony throughout the day. Usually, it's not dull, so I'm sure this one won't be dull either. Coming up, Berliners are protesting after a $23 billion deal was announced to create a giant new landlord. That's next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Well, talking about tapering, Richard Clarida adds his voice to the ranks of Fed officials, saying that a discussion around reducing support may come soon. The EU is set to donate 100 million doses of COVID-19 vaccines as it approaches the 50% mark for adults in the bloc who have received at least one shot. And Dominic Cummings is set to speak to lawmakers this hour, with Boris Johnson bracing for explosive criticism from his former advisor. That's actually due to start very shortly. Now, good morning, everyone. I'm Francine Lackley here in London. Welcome to Bloomberg Surveillance Early Edition. It's a Wednesday that feels like a Friday, but I assure you it is Wednesday, May 26. Now, protests have erupted after two of Germany's largest private landlords announced plans for a $23 billion merger. Now, the deal will create a real estate giant with over 500,000 apartments and has become a political lightning rod mere months before Germany's general election. Now, protesters thronged Berlin's streets. Some executives involved in the deal enjoyed beers on the city's rooftops. Germany's Vice Chancellor Olaf Scholz also told Bloomberg that Germany's housing market needed further regulation.
We need a fair regulation which helps those who are renting their apartments. And we have a very strict regulation in this field, and we are developing some new proposals which makes it feasible for us that we can control the increase of prices. We need 400,000 a year, and we need a situation where 100,000 of the houses are subsidized for social reasons to make it possible for people with lower income or just a usual normal income to pay for a new apartment, a new flat.
Well, joining us from Berlin is Bloomberg's Chad Thomas. Good morning, Chad. Now, if you're American and you're watching this and you talk about rent controls or also just the emotion surrounding this big real estate deal, people will think, you know, you're off your rocket or crazy. But this really goes to the fact that a lot of Europeans have a special relationship with real estate and that government has always been involved.
Yeah, Francine, it's really worth pointing out that in Germany, the overwhelming majority of people are renters in this country. And so the cost that people pay for rent is really hugely important. Of course, Germany is also a country of big cities, and the rent in these cities has been going up quite extensively in recent years. And so you have this movement afoot here really to try and get this under control. There's already been rent controls in many places across Germany. You heard the finance minister Olaf Scholz talking about whether there needs to be even more controls coming in. There was an effort in Berlin to basically freeze rents for 5 years. That plan was passed, and then the German Supreme Court struck that down just a few weeks ago. So there's a lot of tension in the country already around this topic, and then you have the two biggest companies that own residential real estate in Germany saying that they're going to merge, and so it has all erupted now, and we can expect that this will be a big topic in the election, which of course is now just 4 months away.
Yeah, Jen, I mean, were you surprised actually by the fact that we saw so many protests yesterday? And does it mean that, you know, the government could actually not back the deal because it's just too much of a political hot potato?
Just a slight correction. So those protests actually happened on Sunday as this deal was being negotiated. But clearly, there is a lot of tension in the city here and how it's going to play out. One thing that they have done is Deutsche Wohnen, they're the ones based here in Berlin. They've agreed to sell 20,000 of these apartments that they own to the city. They hope that that is one way to get more backing from the city of Berlin. At the same time, though, there is an effort to put a referendum on the September ballot in the city of Berlin that would try to force the city government to essentially take away, buy some of these flats that these private owners, residential property owners have in the city and make them into public housing. We don't know yet whether that's going to make it on the ballot. They have until sort of the end of June to get enough signatures to put that on the September ballot.
Oh, Chad, thank you so much. Chad Thomas there on the protests. Apologies on Sunday, not yesterday. Our Western Europe managing editor in Berlin, but it kind of captures the emotion around this mega deal in real estate. Now, in the meantime, we're also looking at Boris Johnson bracing for criticism from the man who was his most senior advisor. There he is. You're seeing live pictures of Dominic Cummings testifying before Parliament on the government's handling of the pandemic. We're expecting a testimony testifying for about 3 to 4 hours, and then later on in the program, we'll discuss all of that. Some of what we heard from Mr. Cummings with Bloomberg Opinion's Therese Raphael. Now, shifting from Germany, but actually back to real estate, to the UK. Joining us now is Ryan Prince. He's the Uncle Chief Executive Officer and founder. Uncle rents properties in London and Manchester with the aim of modernizing the British property market. So, Ryan, thank you so much for coming on, making us a little bit smart about the rental space here in the UK. When you look at how differently we live and work because of the pandemic, are you seeing people coming back actually especially to London? Do people want to rent more in London, or is there a definite trend of people wanting to move out where rents are cheaper?
You know, I think it's still early days, Francine, in terms of what we're seeing, but we're certainly seeing the trends, leading indicators, our website searches, tours, people coming around, ramping up significantly, which is consistent with what some of the bigger cities like New York have seen as they've opened up, you know, several months ago. So from our perspective, I think we fully expect people to come back to cities for lots of good reasons. And I think there's going to be a big change in how that works between where you live and how you work and working from home, which I'm sure we'll talk about. But writ large, I think people are going to come back to cities.
Yeah. So how are you changing your layouts to adapt, you know, to increasing home working? How will that evolve?
Yeah, I think fortunately for us, Uncle as a brand was based on having a whole variety of shared amenity spaces in addition to kind of full-size apartments in our buildings. And so we were pretty well prepped for what's now become even more important. So I think what we're going to see is a bigger pivot towards how people work from home. And we've all learned how that works and what those shortcomings are. And so where we're adapting is learning from the things that we all didn't like when we worked from home. The doorbell ringing when the Amazon parcel person comes, which, you know, could happen here any minute. You know, so Zoom rooms, meeting rooms when you want to work from home for 1-2 days a week, whatever that's going to be. Places like physical fitness, we've seen the rise of Peloton. All of those things are going to become even more important than they were before the pandemic.
Ryan, we have some estimates that 700,000 foreign-born residents actually left London between 2019, I think it was the third quarter, and somehow in mid-2020. Do you see that in the property market?
Yeah, I think that's a different issue, and I think that's a critical issue for the UK. I think Brexit is a much bigger issue long-term for the cities, particularly London, than the pandemic was. And I think there's no question, you know, we also, in other parts of our business, own hotels and hospitality-related assets. And I think between what's happened in the retail sector, what's happened in the hospitality sector, and where a lot of the workforce comes from there is going to be a shortcoming that the government is going to need to really focus on coming out of this to create a friendly, welcoming environment for that workforce to come to the UK, because I do think that will be an issue.
So, Ren, if I, you know, I'm sure I'll speak to you before 12 months, but what's your main challenge in the next, you know, 11 to 12 months? Is it actually shifting a little bit some of, you know, some of the demand? How will demand change?
Yeah, I think 12 months is going to be the comeback, right? So if you look at the balance between where people live and why they live, so the workforce and opening of retail shops, hotels, students coming back to the country, travel restrictions for business travel and how people use apartments and filling up for moving here for work for 6 months, for a year, whatever that is, all of those things aren't going to come back overnight. And I think that will take 6 to 12 months to sort of filter back in. If you talk to the Heat team at Heathrow and what they're seeing in terms of travel volumes, I think it will all come back, but it will build up. And I think seeing these COVID passports, how quarantine periods work, all of that is what's going to fill our cities. And now those are going to be the biggest impediments, I think, over the next 12 months.
Overall, how do you think COVID will change longer term some of the, you know, real estate allocations? Is it less warehouses, more warehouses, less working space, or does it change it in ways that we haven't realized yet?
Yeah, for sure there will be things that we haven't realized yet. I mean, I know my friend Richard Florida, who wrote a big article for Bloomberg a little while ago, talked about where cities are going to be and some of the reports that sit under that. I think overall we may be drifting to the best of both worlds. So in some ways, I think there will be some good to come out of this from the way people work and live, how companies understand how balance of life can work. And there's no question to my mind that the lasting stigma of COVID will be, or kind of what's left over is the stigma of working from home is now gone. And so from our perspective, how we accommodate that, where you have environments where you have kind of work from home colleagues as well as work colleagues, and environments where you live, where you know those people, and that's part of your more permanent community, not just who you work with, I think will all be permanent factors that come out of this. And more broadly, I think in the real estate space, there's the trend that started earlier, which is what I would think of as the hotelization of real estate. In other words, whether you're an office or retail or living apartments or hotels, services and service to customers is now going to shift enormously from where it used to just be a lease with a tenant. And every single landlord is now understanding serving customers who spend time in those buildings is going to be the critical success factor going forward.
Ryan, thank you so much. Ryan Prince, their uncle, Chief Executive Officer and founder on the real estate market in the UK. Thank you. Now, we're seeing also live images of Dominic Cummings testifying before Parliament. He has told MPs that the government failed the public in the first months of the pandemic. Now, later on in the program, we'll, of course, discuss all of this with our Bloomberg opinion columnist, Therese Raphael. Some of the things that, of course, we're hearing from Cummings, or certainly some of the questions, is, he's saying that when the public needed the government most, the government failed. This is a rhetoric that we'd heard from him, but he also says that COVID was raised with Boris Johnson, the Prime Minister, in early January 2020. Remember, at the time, it was only really present in Asia. Now, coming up, digital experience analytics company Content Square has raised $500 million in a funding round led by SoftBank's Vision Fund 2. We speak to the Content Square Chief Executive, Jonathan Sharkey. That's up next, and this is Bloomberg.
Morning, traders. As you can see, we still hold a long position for euro. So I'm going to place order to sell position if price will change direction to 122.19.7. Okay. So I'll point out we was holding for a couple of days, and right now it's not much point to hold because we're still paying overnight charges, and it's better to close, end up in profit for euro position. So we purchased euro at 122.097, just right here, and I'm going to place an order to sell if price will reach this level at 122.197. So if you follow trade, if you copy this trade with us and you follow our trade, please place stop on profit for euro. Okay. In our case, we'll have £1,000 in profit. In your case, it will be per pip. You will get 10 pips, and you will have to see how much broker pays you per pip. Okay, guys, stay safe, and I'll speak to you later.
Which has bumped the company's valuation up to $2.8 billion. Now, Content Square plans to invest the cash in developing its platform and expanding into new markets such as Asia. Well, joining us now is Jonathan Sharkey. He is the Content Square Chief Executive Officer. So, Jonathan, thank you so much for joining us, and I know for waking up early also to speak to us. First of all, how excited are you about receiving this money? I know you're going to work it on the platform, but how will that help leverage your market share at the moment to become even bigger?
Great to speak with you, Francine. First of all, we are super excited and we see in front of us a huge opportunity to invest, first of all, more and more in innovation and AI. We have 200 people in R&D, and we will triple it down. Second, we will expand more and more internationally, 50% of our business in the US, 45% in Europe, 5% in Asia. So we will try to develop in our existing countries, but also in new territories by hiring overall 1,500 new people in the next 3 years. And we have acquired 4 companies the last 18 months. So we will keep on accelerating on M&A that has been one of the muscle of Content Square.
Jonathan, give me a sense of exactly how many people, I mean, what you do, to put it very, simplistically, it's basically a company needs more access to the digital world, and you can help them maximize it and understand, I guess, how to reach the good content and the good clients. Who's doing it correctly at the moment? Like, how much does this industry grow in the next 3 to 4 years?
So let me give you a quick comparison. If you take a physical store, in a physical store, you know who is entering, who is leaving, and you don't really know what happened in the store. And that's fine, because you can see or you can feel. Online, you are blind. So to really understand why does a user leave a website, what happened in the page, and how to optimize it, we analyze mouse movement, touch, swipe, zoom, every user interaction to provide recommendation. And today, on 100 people who are coming on a website, only 3 are buying, 3% of conversion rate. On a physical world is more 30%. And in the new world we are today, it's totally digital. If you take the total online sales by comparison to the total sales, in 2010, we were speaking around 11% in the US. In 2019, it's like 16%. In 2020, it's 35%. And in Asia, as of today, you can see more online sales than physical sales. So we see a big shift from to the digital world. And I think more than a digital transformation, it will become a people transformation.
Jonathan, so at the moment with the new funding round from SoftBank, you're valued at around, the company's valued about 2.8 billion. How much more do you think you can add to that value? So how much will you be worth in 5 years from now?
I have the impression that we are at the very beginning of our market, at the very beginning of the company. Our market is estimated today at $21 billion. And the topic of improving the experience is more and more strategic. A couple of years ago, the focus was more around acquisition, make more people come to the website, but the cost of acquisition is now very high, traffic is on mobile, conversion rate is low. So that's make more and more this topic of improving the experience as very strategic. And I think that Content Square can become one of the biggest software company of the world, but also one of the best company with a good values. That means a lot to me.
Do you worry about, some of the tech companies being overvalued? Do you worry about, that? And does it mean that actually at some point we could have some correction that could impact the appetite for investors on Content Square?
Well, I'm not so stressed about that, first of all, because the market is big. It's all geography, the products can work for all industries, all vertical, the team is good, and I think it's a requirement for any website or mobile app. So I'm not so stressed about that for Content Square and overall for the tech industry, because they have a good recurring business. They are in a massive market. So I don't see a lot of correction in the tech industry, but I am not a professional investor. I'm just an entrepreneur with a lot of passion who will try to make Content Square a blockbuster.
Jonathan, thank you so much for your time, and congratulations again. I hope you come back on the program. Don't be a stranger. Jonathan Sharkey there, Content Square Chief Executive Officer. Now, Boris Johnson's former top advisor, I have to say it's pretty punchy, Dominic Cummings, telling MPs that the UK government failed the public during the first months of the pandemic. Now, he says that top officials were on ski trips as COVID hit Britain. Up next, we speak about this with our Bloomberg opinion columnist, Thérèse Raphael. This is Bloomberg.
The chief scientific advisor and with Chris Whitty about specific things. Lots of COPA meetings are basically just sort of going through.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Certainly, but the view of various officials inside number 10 was if we have the Prime Minister chairing COBRA meetings and he just tells everyone it's swine flu, don't worry about it, I'm going to get Chris Whitty to inject me live on TV with coronavirus, so everyone realises.
Boris Johnson's former top advisor there telling MPs that the government failed the public at the beginning of the pandemic. Now, we're looking at live pictures from the UK Parliament where Dominic Cummings is being questioned as part of an ongoing inquiry into the lessons learned about the government's pandemic handling. Well, joining us now is Bloomberg opinion columnist Therese Raphael. Therese, thank you so much for joining us. What sort of comment should we expect in this testimony? I mean, it's pretty explosive. A lot of the stuff we knew, but will citizens actually take anything that's said into account?
Well, has given us a pretty good preview of what he plans to say in his extraordinary, I think it's 64 tweet thread in recent days. And we know that one of the things he's going to say is that the government had a herd immunity strategy, that is just let the virus rip, and lied about it. We also know he's going to criticize the government for being overly secretive and in so doing not allowing the information and the transparency and the debate that would have led to earlier lockdowns and a better strategy, for example, in mask wearing. So all of these are criticisms that have really been out in the public for a long time. I'm not sure that they're going to change the narrative, but Cummings tends to have a few things up his sleeve. And what struck me as he began his testimony was the sort of humble note that he began on and the apology that he began on. And so I think this is also going to be very much a battle of credibility, because neither in the public mind nor in much of the media mind is Cummings by any means a neutral observer, and his own behavior in the past, he was a guy in the room, will also raise questions.
Teresa, so is Johnson, is his position threatened at all, or actually just because the rollout of the vaccine has been so successful that he's there to stay?
Right. I mean, that is the key question. And I think that, there's no real immediate risk to Johnson from Cummings' testimony, unless he comes out with something that, really nobody has expected or contemplated. But that doesn't mean that it's not harmful over time, because we're going to have a public inquiry next year. And as people get more comfortable with living with the residual effects of the pandemic, as the vaccines continue to roll through the lower age groups and we reopen, I think there will be more appetite for looking at what happened and drawing lessons. Probably now is not the time where Johnson is going to be seriously damaged by it. But again, that doesn't mean that that the narrative as it develops won't ultimately change the way the public perceives him, and whether they will over time think that he behaved in a way that merits, re-election, for example. So I think this is a very long game Dominic Cummings is playing.
Therese, thank you so much. Our Bloomberg opinion columnist, of course, on all things UK, Therese Raphael. You can also watch the full testimony on the Bloomberg terminal on LIVE Go. Now, Bloomberg Surveillance, your early edition, continues in the next hour. Matt Miller joins me out of Berlin. Katie Lyons will be in New York. We'll look at, of course, everything that has to do with markets, inflation, and crypto. And then later on, I'll be speaking with the London Stock Exchange Chief Executive Julia Hoggett and Deutsche Bank's UK and Ireland Chief Executive Tina Lee about women in finance. This is Bloomberg.
traffic.
Okay.
During the pandemic, no traffic at all.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We are on track to vaccinate 70% of the adult population in the European Union by the end of July.
This could be a very good summer for the world, where the way of a tax race to the bottom is stopped.
If we're wrong, of course we could be wrong, I think we have the tools to address inflation.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, good morning, everyone, from London, Berlin, and New York on this Wednesday. It's only Wednesday. Feels like a Friday. May 26th, our top stories today. Talking about tapering, Richard Clarida adds his voice to the ranks of Fed officials, saying that a discussion around reducing supports may come soon. A new front in the campaign against big tech. Amazon gets sued by the Attorney General for Washington, D.C., and Bitcoin pushes past $40,000 as cryptocurrencies recover some lost ground. We'll speak to the crypto expert, Nick Carter. Now, there are quite a lot of stories, I wouldn't say bits and pieces, but actually things that we're watching. And then, of course, underpinning everything is what we heard from Richard Clarida, Kaylee, and that is inflation. They're thinking about taper. I feel like every week they're thinking about talking about tapering.
Whispering about talking about tapering, maybe. And it's not just Richard Clarida. We've seen a number of Fed officials coming out and having this discussion, really kind of repeating the same messaging over recent days. The market, of course, trying to digest all of that, Francine. In the Asian session, stocks were broadly higher. The MSCI Asia Pacific Index rallying for a fifth day. No real remarkable moves. The outperformance was from the Hang Seng in Hong Kong, which was up about 0.9%. But really the exciting action today, at least in the Asian session, was not in the equity market. It was in other asset classes, the likes of the commodity complex, with iron ore futures in Singapore falling 6.8% at one point. Pulled back that loss a bit, now down just 4.5%, but of course that's as China talks down that commodity rally. And then in foreign exchange, the Chinese yuan is at the strongest against the US dollar since June 6th of 2018, so about 3 years. And meanwhile, the big outperformer in the G10 space is the Kiwi. The New Zealand dollar stronger against the US dollar by about 1% after the central bank said it may start raising rates in mid-2022. As for what the picture looks like here in the U.S., of course, the Fed not talking about raising rates anytime soon, more talking about whispering about talking about tapering, the market trying to figure out what it all means. Of course, it did leave equities a bit lower on the day for the S&P 500 yesterday, but today futures pointing to a higher open. We're up about 11 points on S&P E-minis. In the bond market, yields went lower yesterday. We're creeping up just a touch, 1 basis point on the 10-year Treasury yield to around 1 point.
Okay, traders, I'm going to place new order for Swiss franc. Okay, we still hold a couple of positions, so we need to close them in profit. So right now, I'm going to place an order to buy at 0.89505. Okay, order placed to buy Swiss franc at 0.89505. If you want to follow this trade, please place an order. You still have time, and stay with me. We'll go through this trade together. Okay, stay safe.
Look at this map here. You see European markets. We are looking at gains, at least in the core. The Iberian Peninsula and France are up. You see Ireland there gaining. Austria is down, and there's not a lot of change in Germany and Italy. What I think is fascinating in terms of European markets is we see the German Bund moving further and further away from zero. We thought it would get closer, but now we're at negative 20 basis points. You see, I don't even know how to pronounce that. Francine Financier Richemont, they own Cartier and Van Cleef Arpels, up to an all-time high, and Citi has raised the price target to 128 francs. And then we have the pound. I'm just watching it, Francine, because Dominic Cummings is going to make some headlines today. He put Barnard Castle on the map, and now he's going to tell us a little bit about what Bojo did wrong.
Yeah, so first of all, perfect pronunciation. You just have to shrug the shoulders a little bit. At least that's how we do it in our household when we try and pronounce French. And you're right, Dominic Cummings, he's just talking right now. So this is probably one of the big things that we're watching today. So this is what's coming up ahead. In the next 3 hours, we'll hear from the former aide, Dominic Cummings, currently testifying before lawmakers on the Prime Minister's handling of the pandemic. Now, just by the way he is, he doesn't pull back punches. And he's already said that people were skiing when they should have been at work during COVID. He said the Prime Minister, Boris Johnson, knew about the dangers of it back in January of last year.
Hello,
so
pot.
It would be,
this is kettle.
It will be pretty explosive. Although, and this is not confirmed, pot and kettle is that actually it is Dominic Cummings that was always seen as very right-wing to have, forced the Prime Minister to close the schools to try and save lives. I don't know whether that's true, but we'll get to the bottom of it hopefully in the next 3 hours. Then, Matt, the EIA, or the IEA rather, releases its crude oil inventory report at 10:30 a.m. New York time. Chief executives of the largest U.S. banks, including J.P. Morgan and Goldman Sachs, will testify before lawmakers in the Senate Banking and House Financial Services Committee, and that will be also pretty explosive. Fed officials are continuing to deliver the message also that recent upward pressure on consumer prices is likely to be temporary. The Vice Chair for Supervision, Randall Quarles, spoke yesterday.
My view and the general Fed view that these pressures are most likely to be transitory. If we're wrong, of course we could be wrong, I think we have the tools to address inflation.
Well, joining us to talk about all of this is Steen Jacobsen, Chief Investment Officer at Saxo Bank. Steen, good morning. I know you usually have views different from the Main Street on what we should see in terms of inflation. How has the conversation changed? Will we see the Fed talking about it more soon than the markets are expecting?
I think the Fed is still running a story, which is that it's transitory and it fits the way they want to address the tapering. Of course, they're afraid of creating a 2013 incident. And in doing this, they are now talking to the effect that we have a very high headline inflation, which they think it's transitory. Of course, Francine, as you very well know, I disagree. I think right now we have the biggest mountain of liquidity being created in monetary history inside the Federal Reserve. So much so they have to do a reverse repo of $400 billion last night. And this after they already themselves engineered a 25% increase in a monetary supply without allowing for the banks to actually cater and deposit this money inside the system, so they have a problem in the short end. On top of that, they continue to do $120 billion worth of QE, of emergency measures at a time where there are zero emergency going on in the U.S. They also, on top of that, allow the Treasury to run down the general account to an extent that we've never seen this amount of money flow to the market, to such a small pocket of actual titles and assets that you can buy, that this is creating, in my opinion, a potential very, very nasty autumn.
Yes, Dean, I had to listen to a little Elvis Costello to prepare for the program today because my producer, Hillary, put together a chart. It's called Pump It Up, and you can see how much the Fed is averaging in purchases, but it's up over $120 billion. Last month was $141 billion. Do you think they're going to slow down by the end of the year? Do they need to?
I think they will, as you rightly said in the intro, they are talking right now, which indicates that the Jackson Hole in August is going to be probably right now the venue where they're going to step up. But also remember, all of this liquidity equates to a rate cut. They are still having potentially $1 trillion coming in through the system in terms of additional QE. And the rule of thumb roughly says that $100 million worth of QE equates to about 10 basis points. 1 trillion being 100 basis points of cuts on top of the general account, on top of the overflow that you see in terms of the short end of the market. That's the reason why we have stopped in the inflation expectation. That's the reason why we have a cap on interest rate. But all of this is going to go away, in my opinion, by August. By August, we will be past the 100 years anniversary in China, which I think is critical to the geopolitical and macro environment. And we will be into Jackson Hole. And not least, we will be at a time where Fed probably is preparing the deck for a September tapering.
So what in market positioning needs to change between now and August in anticipation of that?
The inflation expectation, because of course, if you, like I do, believe this is a rate cut, you're fueling the growth, the nominal growth in the economy and the bottlenecks in the economy. Right now, it looks like something else because we have these externalities like China ramping down on commodities into this 100 years anniversary. So there are right now idiosyncratic things that sort of talks to a macro point that we are in a in between. It's basically halftime in this match, which is ongoing. When second half of this match starts, all the way to the 90 minutes is going to be about bottlenecks, inflation, and the Fed staying too long and too aggressive on the liquidity side.
All right, Steen Jacobsen, CIO of Saxo Bank. I wish we had more time with you, so please come back. Of course, Steen running us through everything at the macro level. And I do want to talk some micro now, take a look at some of the stocks moving in pre-market trading here in the U.S. One of the big outperformers to the upside is Urban Outfitters. Shares rallying about 8% after a first quarter beat. That's leading to a number of analysts raising their price targets. Jeffrey saying the numbers mean the bulls are going to come back. Another stock moving to the upside off the back of its results is Zscaler. It's really all about a forecast raise that has the stock up more than 9% in early hours. And then, of course, Bitcoin, I mentioned, is rallying today, really a broad crypto rally, and that is aiding crypto-tied stocks like cryptocurrency exchange Coinbase, which is higher by about 2% before the bell, Francine.
Yeah, up next, we also speak with Australia's richest man, Andrew Forrest, Fortescue Metals Group Chairman. So we'll see how he sees deals ongoing and maybe how he gets into the battery-powered generation. Now, later on, Bitcoin's rebound. Nick Carter, Castle Island Ventures partner, joins us. We're also excited about that interview. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming,
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kayleigh Lyons in New York. Now, we're going to talk to our next guest about hydrogen, green hydrogen specifically, but he made his fortune in iron ore at Fortescue. And I'm looking at a chart here for those listening on radio. We welcome our London DAB digital listeners. What we see is, of course, the incredible march up in commodities prices, the blue line here being Brent crude futures, the dotted line being copper, and the white line being iron ore. But iron ore has come down substantially lately, Francine, and the concern is China is really putting pressure on the metal, on the industry, and the question is, how does this work out? Is it a boom and bust cycle, or can we get prices to be sustainable, just like we want our energy to be? Andrew Forrest is the chairman and founder of mining and resources company Fortescue Metals Group, one of Australia's largest public companies. He's been traveling the world looking to secure green energy assets for Fortescue Future Industries, and he joins us for an exclusive interview from here in Berlin. He's just down the hall from me, but we're socially distancing because we are responsible people. Andrew, thanks so much for joining us. Let's talk first about the green hydrogen push. You're going to supply a ton of it, many metric tons of it, in fact, to Europe, including to Germany by 2030. How much are you going to be able to deliver of this, energy source made just from water?
Thank you, Matt. We're aiming to export to Europe and potentially to Germany minimum of 15 million tons of green hydrogen. That is an amount without any precedent to the world in economic history. It needs to be taken into account by Germany and German policymakers because it's of sufficient scale to completely eliminate the need for any coal importations at all into Germany. So it can be the biggest single step Germany could ever take by 2030, not later, to going green. And of course, what I really would like to stress is that this is an energy which is made from water. If it's made from fossil fuel, it's made from coal or oil, it's still a fossil fuel. But this is energy which is fully made from water and has no carbon in it at all.
Right now, Andrew, we're in the middle of a huge push to electrify our entire car and truck and bus fleet here in Europe, in the U.S. as well, really worldwide. Is that a problem? I mean, a lot of that energy obviously comes from coal. Are we doing ourselves a disservice?
Yeah, I think it's a bit of a deception which everyone's going to wake up to fairly smartly. You plug in your train or your car into the grid. It's whatever's in that grid. Could be coal, could be uranium, could be diesel. What you do know is that it's not going to be green hydrogen. And there's only one source of zero carbon fuel in the world, and that's green hydrogen. It's been considered as the super fuel, the fuel of the future, but unfortunately it's not here. Well, that is now wrong. Policymakers need to take into account all over Europe that this green hydrogen will start hitting your market from 2023 onwards, build up to a scale that could replace most of the diesel or all of the coal importations in Germany alone by 2030. This is breaking news. It's huge in the terms of a whole carbon equation, and policymakers must be able to listen to it and tell their people about it.
Andrew, when will it actually be cost competitive, though? If you look at green hydrogen, and is there a carbon price that the EU should set to try and spur that?
Look, I certainly encourage people to take into account that when they buy gasoline or they buy diesel or they plug their car into anything which uses those things, that they must take into account the full price. The full price is not just what they pay, but what their children and grandchildren are going to pay heavily for, and that's the carbon emissions. But even with that said, we're going to be able to bring green hydrogen in cost competitive with fossil fuels. That means that the huge, if you like, playing field which green hydrogen is playing against, which is the massive subsidies on fossil fuel and no subsidies, of course, on green hydrogen, no help for green hydrogen. We all want to go green, but we subsidise fossil fuels and we do nothing for green hydrogen. That playing field has to be changed. We have to have a level playing field.
Yeah, okay, so you don't have a carbon price for the moment, and this, I guess, is one of the main setbacks. How do you transport hydrogen?
No, look, I don't think it's the main setback. At Fortescue, we're gearing up at such scale that we intend to compete with fossil fuel head on. I'm just letting the whole of the German and European and American public know that the playing field is not level. It needs to be level. Green hydrogen must be able to compete blow for blow with the same subsidies as fossil fuel gets. The transportation of hydrogen can easily be done as ammonia, can be done as ammonia right now, and you can switch it back to hydrogen, or what we're finding with the biggest trains in the world, the biggest ships in the world, the biggest trucks in the world, you can power these trucks, trains and ships on green ammonia if you wish, which of course has the major molecule of hydrogen in it. But if people want pure hydrogen, you can switch it back right now to pure hydrogen, and therefore you've got the complete, totally green fuel. And I say this, if it's not made from water, it's a fossil fuel.
I got to ask about the iron ore price, and really, are we in a super cycle, Andrew, or is this a boom and a bust?
No, look, there's none of the speculators or the hedges or the so-called manipulators, which are the guys the Chinese government is apparently going for. I'd just like to point out, what we're in short supply of is suppliers. I speak to my colleagues at BHP, Rio Tinto and Vale, like I speak to my own leadership at Fortescue. Everyone is doing their absolute best to get as much supply as they can onto the market to try and keep that price reasonable. The Chinese government said, oh, we're going to go after the manipulators and we're going to go after the hedges. Well, you'll knock yourself out. But at the end of the day, it's supply and demand, and we can't do anything about demand. We're working as hard as we possibly can to keep the supply up.
Andrew, what a great pleasure to speak to you today. Good luck, and don't be a stranger. Come back really soon on Bloomberg Surveillance. Andrew Forrest there, chairman of Fortescue Metals Group and Fortescue Future Industries. Now, coming up later this morning, David Malpass, the World Bank president. That interview, 7:30 a.m. in New York, 12:30 p.m. in London. The focus will be on the recovery, but also vaccinations. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London, Matt Miller in Berlin, Katie Lyons in New York. Now, cats may have 9 lives, but Silicon Valley researchers have been working to extend the lives of dogs as well. Now, in the latest edition of Bloomberg Business Week, the head of the startup company Loyal says that research could lead to breakthroughs for humans as well. Loyal has raised $11 million and plans to start trials in early 22 on 2 compounds with potential anti-aging properties. I feel, Matt and Kelly, like every time we got a puppy about 2 weeks ago, and I feel like every story has something to do with dogs. I mean, the amount of research that could be done on this, and they really become like, you know, the extra family member.
Yeah, and they have apparently a very similar aging process to humans because they live and grow with us. I know that my dog Steve is 10 years old and he's got gray hair, but he still acts like a tiny little puppy. Look, he's right on my desk there in the office. So I would love him to be able to live for a couple of decades longer.
Such a cute face, of course.
Yeah.
Matt, you have Steve. Fran has Lupo. I'm so jealous. I have serious puppy envy. I am still here without a puppy. Without a puppy.
Well, Jack, buy her a puppy.
I need a puppy.
I hope Jack is watching.
Nothing like pressure on international television.
There you go. I don't think you can back down. And then it depends on what kind of breed. I mean, it's amazing, actually. 3 million people, and I'm one of them, in the UK got pets during lockdown the last 12 months. This is Bloomberg.
Okay, guys, as you can see, position opened for Swiss franc. We opened just right here, as you can see. Yep. So stay with me. If you open position as well, stay with me, follow my trades, and we will close position. The only bit difference will be that we'll still hold 2 more positions, and we will place stop on profit a little bit farther in a line. If you have our strategy, you know exactly what I am talking about. If you don't have a strategy, if you're not yet our client or customer, you need to understand what we're doing, and you need to go to company.co.uk and get the strategy, so you will be familiar and you will know how we trade, how we do arbitrage, how we trade Forex and Bitcoin. Okay, I'll speak to you later, guys.
With border closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
I certainly feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, if you look at the markets and others, we're so excited, Matt and Kaylee, about actually speaking to Nick Carter about Bitcoin and crypto. But of course, the other big story is inflation once again.
Oh, is inflation really once again a big story?
It never stopped being a big story.
I mean, well, actually, I felt like the inflation concern had come out of the market slightly in the last few days. We are going to talk about what the Fed plans to do. Are they going to taper? When is it going to happen? But I'm really, I was sick of talking about Bitcoin, but I'm really interested in the greenness of Bitcoin mining or lack thereof. So I am really looking forward to the Nick Carter conversation.
Yeah, me too. Kaylee, so apart from inflation, what else are you seeing on the markets?
Well, it's a pretty green day. Actually, it's much better on your side of the Atlantic, Francine. Stocks in Europe rallying for a fifth day in a row. We have the Stock 600 actually at a record high with its gain of about 0.25%. Here in the U.S., after losing a little bit of footing yesterday, the S&P 500 seems to be gaining it back, at least looking at the futures market, pointing to a higher open in about 4 hours' time with E-minis up about 17 or so points. In the bond market, we are seeing Treasury yields creep just a little bit higher, less than 2 basis points, a 1.57% on your U.S. 10-year yield. And then, of course, as we were just discussing, crypto is still in focus, as is inflation, but we have Bitcoin back above $40,000, and it's not the only digital currency. The likes of Ether rallying as well, and as a result, the Bloomberg Galaxy Crypto Index is higher by about 11%. No surprise with gains in crypto coins. Stocks tied to them are rallying in pre-market trading. Riot Blockchain and Marathon Digital Holdings each up in the ballpark of about 5%. And then speaking of kind of exuberant market phenomena, I would just note the Reddit traders are still out there. GameStop rallying 16% yesterday, AMC by 20%. Those mentions on Wall Street Bets and on Twitter are still going and moving the markets, and both of those stocks are higher by about 3.6% before the bell today, Matt.
Do you know that our stocks editor, Dave Wilson, actually rented a whole theater at an AMC movie chain during lockdown to support the business, rented it for a private event? I thought that was pretty extravagant, but sounds like a lot of fun as well. The reopening is back on in the U.S., so I'm not sure if you can still do that. But one of the other things you can't really do is buy a house, or at least you have to be extremely wealthy to do it. Prices have been absolutely soaring. We've seen in the last month the biggest gain across the country since 2005. And of course, the months before that weren't looking at small gains either. The problem is there just isn't any supply out there. So as these prices jump, Francine, you can't really find a place to buy.
Yeah, and prices, I mean, this is probably the story that people, will watch more because it really affects their livelihood. So we'll talk a lot more about that, and overall, we'll get onto the markets with Nicolas Janvier. He is U.S. Equities Portfolio Manager at Columbia Threadneedle Investments. Actually, Nicolas, first of all, thank you so much for joining us. But when you look at what Matt was just talking about, was real estate. If you look at inflation, does it mean that actually real estate funds will get a tougher time going forward?
Yeah, I suppose like many things in the market, the answer, it depends, right? And it depends because clearly as the cost of capital goes up, that in itself is a struggle for real estate businesses. But if the prices continue to rise and they're able to pass the price along either via rent increases or via resale value, then I would imagine that a real estate fund will navigate the period just fine.
Are earnings expectations too skewed to the upside?
No, we don't think so. As the economy continues to reopen up, we see a lot of reasons why earnings should continue to accelerate from here. There clearly is a lot of monetary support in the system, but I think even more than that, the fiscal support that we've seen, unprecedented fiscal support, right? Something to the order of 27% of GDP has been introduced into the system via different stimulus packages, and that is extremely stimulative, and that should flow through and benefit company earnings.
We do see, the stimulus that led to inflation has meant that housing starts slowed again last month. We saw the 10-year yield drop 4 basis points on those headlines. How closely do you watch that market, Nicolas?
We do watch it, but Matt, I would differentiate between sort of the short-term backs and forths between the longer-term trends, right? So I think what we're seeing, which is playing out in the housing market, is right now you have this big imbalance between demand and supply. And so, yes, you're going to see some transitory impact from that, which frankly is what the Fed is counting on, that the impact is transitory. But as that plays out, I think you are going to see some back and forth between is inflation coming or is inflation not coming, and that's going to impact the 10-year. But I think if you zoom out and you take a longer term view, our expectation would be that you're going to continue to see a very strong rebound in U.S. economic conditions. And as a result of that, you would expect that longer term interest rates would follow upwards as well.
Well, all right. So with that growth, Nicolas, we're looking at S&P 4,200. Where is it at year end, or is that already priced in?
We try not to prognosticate at the index level, but I can tell you that when we look at our portfolio, we still see a lot of companies that we're very comfortable are going to be higher from where they're at today. To the extent that that flows through to the index, that would argue that we think there is upside to where the S&P is, but we're very bottoms up, and at a bottoms up basis, we see a lot of companies that have great opportunities to continue to grow earnings as we move through the year.
On that point, we've seen obviously inflation fears easing a bit in recent days, and as a result, we've seen big tech outperforming. Is there still room for some of those growth names in your portfolio?
No, absolutely. But let me reframe that a little bit, because I think sometimes we get a bit lost in the nomenclature talking about growth, secular versus cyclical or value. So let me reframe it and talk about it more in terms of duration, right? And I think what the market is going through right now is a reassessing of how much duration risk you want to have in your portfolio. And so, yes, there is room for growth companies. We think that many of those companies are the enablers of the future and have very strong competitive moats that are going to continue to do well. But I think similarly to how a fixed income investor would think about the world, in a world where you have rising rate backdrop, you do want to shorten your duration a little bit. So that would argue for having more value, more cyclical. But I just want to reframe it. I think it's less a value cyclical growth secular debate, and it's much more a focus on duration.
So in some of those shorter duration bets and some of those cyclical plays that go along with it, how much oxygen is left, especially as we see with materials, for example, the commodity rally cooling down just a little bit?
Yeah, I think I'm going to reframe it and talk a little bit about short term and long term. Given the run that we've had in commodity prices, certainly over the last 6 to 8 weeks, and some of the supply constraints that we've had, it's no surprise that you've seen prices may have gotten a little bit ahead of themselves. That said, I think as we move forward, if the economy continues to open up in the way that you would expect, that portends more demand for commodities. You need commodities to build houses. You need commodities, steel to be able to build more cars that we know are in demand, et cetera. And so that should be relatively supportive of commodity prices as we move through these very early innings of an economic reopening.
Nicholas, thanks so much. Nicholas Janvier there, U.S. Equities Portfolio Manager at Columbia Threadneedle Investments. Now, coming up on Bitcoin's bounce back, Nick Carter, Castle Island Ventures founding partner. We're all looking forward to that interview. He's coming up next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
With the announcement that came out of China with regards to additional restrictions on Bitcoin and on Bitcoin miners, we all saw the impact that that's had on the price. But keep in mind that was quite a significant shock, so we should expect to have seen volatility of this nature.
Well, BTC Markets Chief Executive Officer Caroline Rowler speaking with Bloomberg yesterday. Now, for more on this, let's get straight to Nick Carter, partner at Castle Island Ventures. Nick, I know you're pumped. It's like 5 in the morning, and we're so excited to speak to you. So thank you so much for waking up for us. Nick, you are, without a doubt, one of the most prolific writers on Twitter and elsewhere about Bitcoin and green things. If you look at what's happened over the last 2 to 3 weeks, is Elon Musk the right person to lead the charge on this?
Possibly not as far as the Bitcoin community is concerned. Bitcoiners are still intensely skeptical of him, and they view him as conflicted, frankly, given that his business partially involves the sale of offsets. But regardless, the proposal that he has come out with now for miners to be more transparent in terms of their energy mix is a good proposal. So regardless of who it's coming from, it's a good idea.
So what is the best idea? If you look at, the Bitcoin Miners Council, I mean, how do you regulate it? What comes after Bitcoin? Is there going to be something, greener? And when do we find out, really?
There's many alternatives to Bitcoin that exist, but none of them has ever been able to supplant it. Ultimately, Bitcoin is this kind of decentralized synthetic commodity, which is very resistant to regulation, right? If you ban Bitcoin in one jurisdiction, the hash power will just flow to a new jurisdiction. And there's going to be no shortage of friendlier jurisdictions, even if individual countries do ban it. So ultimately, it's a question of, I would actually encourage policymakers that have greener grids to encourage the local mining of Bitcoin. And we've seen a few policymakers thinking about doing things like this. But, it's very difficult to ban the commodity outright or, stop its mining occurring. Elon's idea, or, that of North American miners, is to be more transparent about the kind of energy they're using. And because North American Bitcoin miners are cleaner than many other sort of industrial consumers of electricity, I think the truth is kind of going to vindicate them as they become more transparent here.
Yeah, you have to wonder if the power used to mine Bitcoin in North America is cleaner than the power used to power Elon Musk's car fleet, right? I mean, Teslas are also charged with electricity, mostly made by coal. Nick, I always find it interesting when policymakers say Bitcoin is bad because it's used for money laundering, Bitcoin is bad because it's used for illicit activities, and then, of course, when compared to the dollar, it doesn't even make a dent. Is the dollar also, does the dollar also have a carbon footprint problem?
That's an interesting question. It's not exactly an apples to apples comparison because Bitcoin as a decentralized system relies on this energy expenditure to stay secure without a leader, whereas the dollar is, of course, administered by the US government. But you're absolutely right. The concern about illicit activity is an odd one. Any monetary system is always going to be used for crime as well as more salubrious purposes. All of the data that we have seen, and this is kind of eminently traceable because Bitcoin is this relatively transparent system, indicates that in absolute and relative terms, the dollar is used for illicit purposes far more than Bitcoin. So, the crime angle is a pretty curious one. I mean, we didn't ban dollars because Pablo Escobar had heaps of dollars in his sort of in his basement. So, Bitcoin storage will be, it's money for enemies. It's a device for final settlement. That's all it is. It's an apolitical system.
What about proof of work versus proof of stake? I mean, is Ethereum necessarily greener than the OG cryptocurrency, and does that make it maybe a better bet?
Well, Ethereum is undertaking this planned transition to proof of stake, which effectively means that consensus or political power within the system is a function of coins held as opposed to hash power contributed or energy burned like with Bitcoin. Proof of stake systems already exist in the crypto space. There are many experiments there. I'm a little bit suspicious of it for Bitcoin. I don't believe Bitcoin would ever move to that model. Ethereum certainly seems intent on doing it. Certainly, it means there will be less electricity or energy burned to support the Ethereum system. It will still consume capital resources, so it will not be costless from a societal perspective, but it will likely have a lower carbon emissions factor, for instance. It's just a different system. I think you do have to consider the assurances you get and the trade-offs involved in proof of stake. I would be concerned that, for instance, large custodians would be able to have considerable control over a proof of stake system where ownership of coins is tantamount to political power.
Nick, I want to talk about regulation because for a while there was this narrative out there that regulation was actually something that crypto needed, that it was a friend. Is it still a friend, or is regulatory risk now, on the other side of the coin, now a foe?
It depends on the regulation. We've seen FinCEN revisiting the regulation on crypto here. The SEC is likely going to have something to say about the largely unrestricted token markets. I think everyone benefits from clarity from the regulators. I would say, as far as Bitcoin is concerned, we do have a fair amount of clarity. Bitcoin is, quite well understood by FinCEN, by the IRS, by Treasury. The remainder of the crypto markets less so, but everyone in the crypto markets right now is kind of playing the waiting game, looking to see what the SEC has to say about an ETF potentially, although after the volatility of this year, that seems to be getting further and further away.
Nick, you say everyone in the crypto market, and increasingly it seems that also includes institutional investors. Given the volatility we've seen recently, do you think that's a product of institutional involvement or a deterrent to it?
I actually thought that the more institutional profile of ownership would temper Bitcoin's infamous volatility. So I guess I was a bit naive for thinking that. But, Bitcoin is infamously volatile. People are aware of that. I wouldn't be dissuaded by it. It's kind of a known feature of the system for something that is absolutely scarce, where there's no possible supply response to changes in demand. It's going to be very difficult to accommodate new inflows without that being expressed in volatility. And because we have no stable valuation models for these systems, our expectations fluctuate rapidly. And of course, the facts on the ground are changing too. We see, really interesting dynamic news out of China. So it doesn't surprise me that things stay volatile in the asset class.
Nick, Danny Berg and I were just talking about, this interview and some of the things that we were interested in. And, I guess what is striking is that you are very good on Twitter. You're very good on Twitter. You're a prolific writer, and that helps in understanding the market and understanding Elon Musk, when he tweets. Do hedge funds need to start having accounts on Twitter just to follow what's going on? Do you actually see them developing a Twitter desk to just keep an eye on things that are moving?
Twitter is the epicenter of the cryptocurrency discussion. It used to be Reddit. Before that, it was forums and email lists. Today, it's Twitter. It depends on the jurisdiction. It might be WeChat for China. A lot happens on Telegram. But yes, this is an adjustment a lot of funds will have to make. The market-moving news is there. It's on Twitter, is normally the #1 best source of alpha. Virtually everybody that is impactful in the crypto space is active on there. So yeah, it's an absolute must-have for any fund that's operational in crypto.
Nick, thank you so much. A victory lap also to the Bitcoin mug you're using to keep you caffeinated. Nick Carter, their partner in Castle Island
Show us the mug.
Joining us this morning. He did. He's there.
Shout
it's
out
nice.
Bitcoin. There you go.
We're all hoping to have one as well, especially Kaylee, who wakes up very early. She definitely needs a Bitcoin mug. Now, coming up, we'll get the White House's growing view of cryptocurrency regulation with the Council of Economic Advisors member. He's Jared Bernstein. That's a little bit later, so it'll be interesting to have these comparing and contrasting views with Nick Carter. That's at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London. Matt Miller in Berlin, Katie Lyons in New York. Now, we're just getting a headline crossing the Bloomberg terminal that could have a big impact actually on Facebook. This is according to the Financial Times, and the European Commission, according to the FT, is set to open a formal probe into anti-competitive practices, alleged anti-competitive practices. This all has to do with classified advertising. A reminder, the EU had launched previous investigations into similar matters onto Microsoft, Amazon, Apple, and Google. I think Kaylee was just saying that pre-market, where it's giving up some of its gains, but pretty much unchanged at the moment. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I love the fact that I think this is what the pros look at, according to Tom Keynes. You're looking at gold and yen.
Well, looking at gold and yen, I think we could stay on Facebook as well. That's a big announcement on the antitrust battle. Let's get through the chart very quickly. Maybe you've got time to get back to the headline out of Europe. This is yen, and this is a really, really historic chart. And this I call the Malpass-Gartman chart of the great market call of the head of the World Bank when he was chief economist at Bear Stearns, where David Malpass said, look, the deflation is over in Japan. Down we go through the 1990s to where Malpass, the blue circle, makes a really historic and important announcement. And up we go with gold straight up to the moon, is set in yen. Gartman picks up the story on the right side of the chart. There's a churning period where Gartman's like, we're waiting. And then boom, Francine, up we go to 1900 an ounce, and a lot more than that in yen.
Yeah, I'm looking forward to the conversation with David Malpass. Tom, thank you so much, co-anchor there of Bloomberg Surveillance. If we get back to the breaking news that we had just a couple of moments ago, Brussels, according to the FT, actually opening this antitrust probe into Facebook. Kaylee, I know you're watching a lot of the bank testimonies, but actually, if you look at what just came out of Brussels, we haven't heard from Brussels or the Commission yet, but certainly Facebook was one of the only big U.S. tech companies so far not being investigated on this.
Yeah, and now it is. And of course, this follows news we got yesterday, Francine, about Amazon and an antitrust investigation here in the U.S. Really the first antitrust case that is faced here domestically, where I stand in New York. So clearly a crackdown happening on not just Facebook, but really big tech companies across the board, Matt.
Yeah, but something that could take a long, long time, so investors may shrug it off. We're going to see a super flower blood moon tonight, or rather you're going to see it, Kaylee, in the U.S. Francine, I think we may miss out on it from here in Europe.
That is what I'm watching, but I'm also watching Dominic Cummings because he's still testifying, and he's said some pretty explosive things on the Prime Minister and Boris Johnson's handling of the pandemic. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Is not necessarily 100% comfortable with the Fed's ability to do everything that it says.
We've already had a bit of a melt-up in the first half of the year, so we don't necessarily see another melt-up happening.
The idea of transitory is a debate we will be having consistently until October.
Even if we get some decent CPI prints for the next several months, I don't think that's going to be enough to force the Fed's hand into tightening any time before 2024.
You cannot really push the story of average inflation targeting and then have a rate hike as soon as 2022.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 1/3% on the S&P 500 this Wednesday morning. We advance about 11 points on the S&P. On the NASDAQ up 30, up 0.2%. TK, the most important development of the last 24 hours. Talking about tapering, yet that wasn't the most important development. It was the bond market. What it did off the back of those comments from Vice Chair Clarida, and that was not a lot. Yields lower, your 10-year comfortably below 160.
Yeah, you don't see it on radio, but that banner across TV this morning of 1.5672 speaks volumes to a huge body of market participants, John. This is a global Wall Street shocked over this move. We've really come in. We've got the equity lift with it as well. And we're seeing some dynamics in the currency market with renminbi out to new strength this morning, but there's some real nuances here. John, I want to stop the show. Matt Bessler and Craig Torres out on the future of Richard Clarida in the January of 2022. And maybe on this May Wednesday, John, it begins to percolate about the makeup of the Fed into next year.
Well, let's talk about the makeup of the Fed, Tom, and how things changes. I doubt it becomes hawkish. It's set to become a little bit more dovish, maybe. If you think about who's in the running right now to take the top job at the Federal Reserve, we're thinking about Governor Brainerd, maybe. We're thinking about President Bostic. He's thrown his hat into the ring in the last week as well in an interview with Axios. You'd have to say, Tom, that it's set to get more dovish, not less so.
Yeah, I would say so. Michael McKee under consideration as well. I would note, John, yes, the trend is hawk dove, and it is towards dove, but mostly to global economists in market, in academic. It's about the chops of the people involved. The names you mentioned are hugely qualified.
Have we become desensitized to all of this, Lisa?
Well, to some degree, yes. I think people are looking at the data because the data ultimately will determine a lot of these paths. However, I will say that Randy Quarles is who I'm looking at. The idea that the vice chair of supervision is really under fire from no less than Senator Warren basically coming out and saying, you failed the financial system. I'm not sure exactly what she's referring to, except for the fact that he has reduced some of the regulation. So how is this going to dovetail into potential volatility, John?
I think it was something along the lines of the financial system will be safer once you've gone.
Yeah, which is
I mean, it was pretty blunt, Tom.
Yeah. Guys, I would think, and Lisa, thank you for bringing this up, because I think we have to really partition the parlor game of the market, which is in the purview of Richard Clarida, the Columbia professor, versus the bank regulation side. And Lisa, I would suggest that's more the political side.
Yeah, well, I think that this whole thing is becoming very political, and it's going to be interesting, John, to see how Biden dovetails Fed independence with this wish for ongoing dovishness. And how do you even get more dovishness?
We'll tie it all together, Lisa. We've got the Wall Street CEOs testifying on Capitol Hill a little bit later today. Are they seriously going to sit there and beat the drum about the lack of lending in this economy?
Yes.
With the CEOs sitting there and saying there's a lack of demand?
Yes.
Is that what today's going to look like?
That's exactly what today is going to look like. Why are you not lending more? Why are you not trying to bring up the lowest income Americans Americans, that is what you're going to hear. And the question that I have is Fed policy actually hindering the bank's abilities at this point to lend? Is this actually creating some sort of disruption in the credit function? And this is what we see on an ongoing basis with the glut of cash in the financial system, John.
Looking forward to the coverage of that a little bit later. That's one of the main events. Lisa will run you through the other two in just a moment. Let's get to the equity market. 41.97 on the S&P 500, up about 12 points. We advance a third of 1%. Nasdaq doing okay, up 34. We advance about a quarter of 1% there. And yields, it was what the bond market did not do that was really interesting. Yields didn't go high, they went lower. 156.55 on 10s. Yields high by not even a basis point on the day this morning, Lisa. We're up 0.0067.
And John, I think just one of the most under the radar data points yesterday was consumer confidence that came out and actually showed a deterioration in some of the confidence due to inflationary concerns. This idea that that is already dampening perhaps some people's ability or willingness to go out and spend freely. It's just this idea that higher inflation expectations could slow growth. Today, we are going to be hearing about those Wall Street CEOs who are going to be testifying in front of the Senate. We've already talked about that. Very much in front and center is a lack of lending at a time when they are flush with cash. 1:30 p.m. I know that Tom is not that enamored of Fed auctions, of Treasury auctions. This is interesting, though. $500 billion in overnight repo being offered. If you look at the reverse repo operations, basically banks looking to park cash at the Federal Reserve in return for a small bit of income. It has surged to the highest level since 2016. Again, this speaks to the glut of cash, this idea they just need a place to park it, and raises questions about further disruptions in some of that lending function as we just see an amazing amount of money clogging up the system, sort of this irony, an embarrassment of riches. And then at 2 p.m., the SEC's Gary Gensler is testifying in front of the House Financial Services Committee and government committees. Interesting to hear what he says about crypto. How much are they going to regulate Bitcoin? We have heard from an increasing number of Congress members saying they are concerned about some of the volatility that we've seen. At what point will this rise to action that seems like it's in the nearer term rather than way off in the distance, John?
Lisa, thank you. Why can't all governors be like Governor Orr of New Zealand? I love this quote. These are highly conditional projections. You're talking about the second half of next year. Who knows where we'll be by then? So wouldn't that be refreshing if we heard that from the Federal Reserve and the ECB? Who knows what's going to happen next year?
You know, I know we got to get to our esteemed guest here in the equity markets, but John, I really think looking out, it's maybe looking out 3 or 6 months and maybe a new enthused view on GDP.
New Zealand Central Bank just introducing the prospect of some tightening, and the central bank governor being very open and honest about an inability to predict the future. There we go. Howard Ward joins us now, Gabelli Fund CIO of Growth Equities. Howard, what an important transition point for this economy. As you've pointed out, peak growth is here potentially, and we're about to make this transition from recovery to expansion. Howard, as a market participant, how do you think about that dynamic? How important is it?
Well, first of all, it's been, I think you have to say that we can argue about the amount of stimulus, what the Fed's done, and all the spending, but it's been very successful. The economy is rip-roaring. And this is the quarter where we will transition from recovery to expansion. And we don't know the exact day, Jonathan. Maybe it's today. Maybe expansion has just begun this morning. I don't know. But the outlook remains sterling in terms of growth. You're looking at 6% plus growth this year. We haven't seen that in this country since 1984. After last year, we had negative 3.5% growth, the worst growth since 1946. And next year, we're looking for a slowdown to around 4%. We haven't even had that for 20 years. And so the stimulus and the reopening of the economy is providing a tremendous lift. And I do think, you were talking about the bank lending earlier, I do think you're going to see the demand for loans pick up. It has to, given what's going on in the general economy.
Howard Ward, you talk about the rocky road ahead. We had a lovely move here coming out of this expansion, and you are enthusiastic, but you talk about a grind, and you talk about a rocky tape. What am I in if I'm enjoying a rocky tape day to day?
Well, I would first of all just make the point that typically in the second year after you get the big advance in a market coming off a bottom, that second year usually is much more muted. You know, think returns in the sort of 8 to 12% range, not the 20 to 30% range. And if you went back and compared the current trajectory of the market to what happened coming out of the 09 bottom, we've been following that path very closely. And if we do continue to follow that path or that script, then we will have a hiccup or two in the next 6 months. Because in 2010, after a surging market in 2009, that's exactly what happened. Now, that market still closed higher in 2010, and I think it will be nicely higher this year, particularly so because I think even more so than in 2010, the earnings outlook is truly remarkable, to say the least, because while the consensus earnings expectations would be for growth of about 30% this year and 13% next year, so $182 on the S&P this year, 205, 206 next year. Tom, if you look at the first quarter earnings that have been reported, the annualized run rate on those is around $200. And so that would suggest that the consensus earnings numbers for both this year and next year are materially lower. They could be substantially higher. And so I do think that, yeah, I think we're going to have a rocky tape. We've seen that a little bit. Rates are and should be grinding higher in tangent with an economy this strong and with some heightened inflationary fears. And it's going to be that grinding higher of interest rates that creates rocky tape. But beyond that, the outlook remains very positive. I would not be too cute in trying to trade this market. It's too early to turn your back on this bull market.
Just real quick here, I'm wondering what is priced in, certainly, to U.S. equities at this point, given the fact that Janus Henderson just upgraded their forecast for global dividend payments to $1.36 trillion this year, the third highest on record.
Well, there's a lot priced in. And so you're talking, if you looked at those consensus numbers in markets, 23 or so times forward 12-month earnings. Historically, for example, in 2019, when rates were in the low 2% range on the 10-year, you had the market at around 16.5 times forward earnings. So there's a pretty big gap there. And